All right, everything looking good over here. Should be live. And let's get it started. It is Sunday, July 25th, 2021, 8 p.m. Eastern Standard Time. Welcome back to the channel, Crypto Trend Trader, with our Sunday market look ahead. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. New pathway in the chat. What's up, my man? Good to see you. Where the retrace, bro? We got the retrace. What do you mean? Got the perfect pullback on Ethereum and just about on Bitcoin as well. But yeah, let's jump into it. Obviously, some quite bullish price action on crypto over the weekend. Everything looking good. Got a nice push up from our 4-hour cross once we confirmed above 30,675 and invalidated the bearish divergence on the 4-hour. It started to look pretty clear that the daily divergence was going to play out. So we can go ahead and take a look at what we're seeing over there first. Start off with crypto and kind of mix it up today. I typically like to wait for other people to get in here. Yeah, you know what? Let's do that. We'll just do crypto first. But we'll do crypto the first of our asset classes. But I want to wait a minute because typically that's what people come check out. Is that cryptocurrency. So 10-year treasury doing what we've been doing. Again, we bounced the Fibonacci 0.5 level perfectly. Hit our first target area here in green, second target area down here in blue, right at like the 1% or just under 1%. It's possible we don't get there. It's possible that we do. But at this point in time, everything is looking good. We have multiple green histograms on the TJD, TDMACD. We're getting a hard buy signal coming out of the bearish control zone. Daily looks good here for a potential bounce, but we'll have to wait and see. If we look at the weekly, we have all red histograms on the weekly. We're down inside the bearish control zone. We do still have a blue slope at the time. But to tell you the truth, at this point in time, it looks like we're likely to get continuation. I really want to, before I can start getting bullish on the 10-year treasury yield, I really need to see like 1 or 2 green histograms at least on the weekly. So I think more likely than not, there's a possibility we're headed back down here to like that 1% range. Again, not to be like a contrarian all the time, but once again, we were expecting yields to sell off. Everybody else was expecting yields to go up after it happened. I got to just stick with my guns here on this one and say it doesn't look to me like we're carving out the bottom yet. I think more likely than not, we get a little deeper of a pullback here. Everybody flips over to bearish, and then we get our move back up because you'll notice that 95% of the quote-unquote analysts or, TA on the, basically on the internet, on TV, mainstream media, talking heads, it's all like after the fact. It's all hindsight TA. I like to predict what's going to happen ahead of time and then use that to make money. So, and then if we look at our monthly chart, we can see here very clearly the monthly chart is playing out like absolute clockwork. We have been basically operating inside of this pattern since 1981. Obviously very clear support and resistance from our blue support line, our red resistance line, and then also the heart line as well. And now here we have broken through the heart line to the upside. We have come down and we are now retesting that heart line for support. So what we want to see is basically like, these next 5 days of the month kind of carve out this bottom right here. We could easily push back down lower. We could easily bottom out right here. But at the end of the month, the absolute best case scenario would be for this to essentially just wick down here a little lower even, and then just get bought back up to the heart line. It's possible we already saw that wick down happen, and that is our bottom. The monthly chart's giving us a little more bullish of a picture, as we did get this little wick down here, and then it got bought back up. If this holds at this level, it's going to obviously look more bullish. We did get back on top of the slope line. We've had only green histograms on the monthly since our bottom back here. Once we left the bearish control zone and got the hard buy signal, got the cross of the stochastics, we have basically just gone parabolic straight back up to the upside. And now here we are getting ready to enter into the bullish control zone. So, based on this, we can turn on our moving averages. Extremely bullish. We got the 821 cross back to the upside. Basically, we have sold off below it. We want to see if that holds as support. Obviously, ideal situation would be for this monthly to end at about 1.35, right at the 821 cross to the upside, after which basically this inverted head and shoulders would play out. We get the comeback up here, we break through that heart line, and then come up, get our measure, move back to the top of the channel. But again, this could happen over months and months and months. From basically November of 2018, that was 3, 6, 9. It took a year to make that move down. So it's very likely it could take a year to get back up here to like that 2.75 or somewhere around there. So, but again, we have got the cross of the 821 to the downside. It's possible we bounce this area, but essentially all we're looking for is just a higher low. That's the most important thing on this chart right now. That's what we're paying attention to. We do still have technically a positive slope on the 200 exponential and simple on the daily, but they are getting pretty tired. So, and then the TLT chart obviously is just going to correspond like inversely. This is the 20-year actual treasuries. So the bonds are basically just doing the opposite. Are they topping out? Are we topping out this right shoulder here? Are we going to continue up and just come a little bit higher here? Either one could happen. Typically, I like to see these things top out at like an exact fib level. The 0.5 would be ideal, as that would be the 50% from the head, to the neckline right here, and then a 50% retrace of that move down, the same way that the yield on the 10-year basically went down and then had a 50% retrace back up of that move. So, these are very, very closely correlated. The reason I like to look at the 10-year and the 20-year, and then obviously look at the inverse charts, one bond and one yield, is just to kind of see if there's any, clear signs of like yield curve control type situation taking place, which I don't see. They're still very, very correlated. So that's good. Let's go over to the dollar and take a look at what the DXY has to say. DXY situation is still playing out exactly as we expected. Once again, we have a inverted head and shoulders pattern playing out, or a double bottom, depending how you want to look at it. We have our left shoulder, our head, the very clear neckline here with the dotted blue lines, and then our right shoulder here. That is a double bottom. We have the rounded eve and the pointed atom, and now here we have come all the way back up to what you could argue is either the yellow line is the resistance / support of the double bottom, and then we have the diagonal line, which is a little less reliable, of the head and shoulders. We have broken through the diagonal line of the head and shoulders, consolidated above it, retested it as resistance, and it held strong. And now here we are just eating through the sell orders on the resistance line. The more times we come up here and we touch this resistance, the more likely we are to break through it. It is still possible to get a situation like this where we basically just get tired and then sell off and start dumping down. But at this point in time, I don't see anything like that taking place. We have a couple red histograms on the TJD, TDMACD, buy, sell, buy at the top of the range. These buys are very unreliable, but this is just whatever. It's like indecisiveness up at the top of the range. Typically, when I look at a pattern like this and we're in a very clear uptrend, and then we start to put in a, essentially a channel that is like ascending, it's going up slowly, that is a bullish pattern. It's bullish. It typically means bullish continuation, because we're continually putting in a high, a low, a higher low, a higher high, higher low, higher high, higher low, higher high, higher low, and then we just keep moving up like that. So typically this is bullish. It's also bullish, if we basically put in a descending channel. What you don't want to see is like a wedge taking place. But in my opinion, this does not appear to be a wedge. It is possible that if you were going by like wicks, you could draw it slightly different. Maybe go something like this and then argue that it's a wedge. Definitely a possibility. I like how this looks on this time frame and others using the closes. But again, still a possibility, always a possibility. But the longer we consolidate at a resistance like this, or if it was the other way around, the longer you consolidate at a support like this, the more likely you are to break through it. So continually consolidating at this level makes me think we're going to break through here and get our measure move. The daily doesn't look amazing, still looks good. Essentially looks like a bullish reset. Price is slowly creeping up while our indicator oscillators creep down. So they're basically just refueling right now, filling up the gas tank so they have enough to, get to the moon. So that is the DXY on the daily. On the weekly, very clearly support and resistance, paying close attention to those. But if we look at the weekly right here, we had triple bullish divergence at the bottom of the range here. Obviously came out of the bearish control zone, got the hard buy signal, 1, 2, and then this one just a little sliver, but 3 times in a row with that bullish divergence, you know, basically told us that move was going to be powerful to the upside. Now here we are, all green histograms above the 0 line, above the slope line. The slope line has flipped over blue. Everything is bullish on the weekly. We can turn on the moving average as well. And you'll see here, we crossed 821 to the upside. First time it happened, we got rejected. Second time it happened, we're just consolidating at that level. Again, we're just eating through these moving averages. First time we could not get above the 50 and 55 moving average, the 2 greens right here. Second time, you know, here we are, basically chopped through them, and now we're above them. I do want to talk about something else here. People always talk about golden crosses and death crosses, and you know, I talk about how they're basically lagging, and typically a lot of times they'll give you a false signal. So we can see right here we have our 2 green moving averages. This is the 50 simple right here, this is the 55 exponential, and then we have the bright blue one, the 200 exponential, and then we have the darker blue one, the 200 simple. So this was one death cross right here at the absolute bottom. The absolute bottom, the lowest point of the entire move, was our death cross. So I guess you could say that was a false signal. And then once again, here's our other death cross, slightly before the bottom. So I wouldn't get too excited with golden crosses and death crosses. Oftentimes they will signal the trend is going to continue in that direction, but equally as often they will be the inverse and called the absolute bottom. So I don't know. I wouldn't get too caught up with them. And that's for every market, not just this one. And we'll see that in Bitcoin here shortly, because that's where we're going next. So DXY on the monthly, you know, obviously every time we've been down here in the bearish control zone, when we got the hard buy, we got a bunch of green histograms in a row. We saw quite a bit of continuation out of that area. And now here we are leaving the bearish control zone. We got the hard buy signal on the cross. We are busting through key resistance. We have found support at the 200 exponential. The previous time we tested 200 exponential and 200 simple. Now we have tested only the 200 exponential, and we're moving up here. 200 simple is curved to the upside. 200 exponential is curved to the upside. The DXY is bullish. The dollar is bullish in comparison to other currencies. Anyone that doesn't see this is clearly blind or has no idea what they're talking about. Shorter time frames, you could argue, yeah, there's maybe a couple things, but honestly at this point in time, there's really no denying what's taking place on the DXY. So all the fundamentals in the whole world can't stand up to actual technical analysis. There we have the DXY. So yeah, let's jump into crypto, kind of jump around today because there's so much going on, and we got some positive price action over the weekend, not to be unexpected. As you know, once again, we were talking about some bearish divergence on the 4-hour time frame, and you know, overall, the invalidation level for that bearish divergence was 30,675. Once we closed above 30,675, it was very clear that that bearish divergence was invalidated, and it looked like we were going to get our bullish divergence playing out. So if we look here and point out where our you know what? Let's switch over and talk about this first, and then we'll come back to the futures chart. So we had some clear bullish divergence taking place. You know, we had obviously a low right here, and then we had another low right here, low right here, another low right here, and then a third low right here. And then we can see obviously, you know, our initial push down, how much energy was expended, this massive amount of energy here, and then we had a slight bit of energy here, and then we had even less energy here, and each time we made a lower low on price action. I don't know what I have, drawing tool wise on this. So but yeah, that's what we were paying attention to. And then obviously now we're getting a push up. So the key levels that we're paying attention to are basically right where we're at right now. This was obviously, this area right in here was a key area. Yeah, just ignore those lines. This is obviously a key area we're at right here. If we take out this little high right here, basically where we're at, that's going to basically act as a current like resistance. If we can take that out, our next area of resistance, because that's our previous high here. So we have a low, then we have a high, then we have a higher low, depending if you're going by wicks or candle closes. But now here we are at that same level. If we can break through this level, if and only if we can break through this level, we're then going to pay attention to our next key level right there. And then finally, the most important of these levels is right there. So the reason I'm saying that is this was a clear resistance multiple times right here on the daily. And then this was our previous high on the way down. So we had come down, put in a low, and then we bounced up and got rejected at that level. So now here we put in a lower low, came up to a lower high, and then here we put in, again, depending on what chart you're looking at, if you're looking at daily closes or if you're looking at wicks, you could argue this was our low here, this was a higher low. When we're looking at divergence, we need to look at closes because that's how the divergence indicator oscillators are calculated. They're calculated based on candle closes. So if we're on a daily time frame, we need to look at daily closes. When we're looking at actual lows, though, we can look at like the wick, for instance. So if here we have a low wick and then here we have a higher low on our price action, what we want to do now is put in a higher high. So from that higher low, this was our high. So now we have a low, we have a high, we have a higher low. So now we want to put in a higher high. So we really want to take out that 36,618 level. If and only if we can get above that level, we'll start paying attention to these previous resistances at 39,200 and 40,711. Now we need to keep in mind that while we do have bullish divergence on our indicator oscillators, and you can see we have it on the RSI as well. Here we have our low, then we have a higher low, then we have, it's arguably a higher low. It's slightly lower. But again, it depends on what exchange you look at too, because on Bitstamp, it might show up slightly different than Coinbase, which might show up slightly different than Binance, et cetera, Kraken, whatever. But essentially, the idea is that if we do get this bullish move back to the upside, which we're seeing right now, if we get continuation, we would expect this to underperform because we're in a predominantly bearish trend. So that's what I'm paying attention to. Those are the key levels I'm paying attention to. Let's look at our other charts here and see what's going on as well. So we finally have some green action on the daily for Bitstamp. We have flipped over our slope line to blue right here. So we have a bunch of green. We have a slope line that is blue now. So it says we're strengthening to the upside on the daily. We have also from the Fisher, that was the waddah explosion. From the Fisher Transform now, we have crossed over the zero line and we're to the upside. We have green. That's good. And then obviously on balance volume, we have gotten back above the slope line. We are outside of that area and we are strengthening to the upside. That's what we want to see. We want to see people buying. We want to see more buying than selling, based on not only like the actual price action moving up, but we want to see it moving up with volume, telling us smart money is buying as well. So, and then on the actual chart itself, we had two key areas we're paying attention to. We had this channel right here that was very important, the blue one, and then the heart line is here in green. So we had put in basically a top here, and then we had a pretty clear, support line at the bottom. We had wicked outside of that support line here, and we had stabbed outside the support line here, and it looked like a break. But obviously, was a false alarm as we bullishly engulfed and moved back inside of it. Now here we are at the heart line. The heart line has acted as resistance here, support here, support here, support here, resistance all through this area. And now here we are. We just want to make sure it does not act as resistance again. If we get back on top of it, come back for a retest, we would expect continuation to the top of the channel, at which point in time, it'll just look like a sideways channel has been taking place. And then also, we have our second pattern here as well, which is I'm just going to make it a little brighter there. We have our second one here, which is this descending channel right here that we were operating inside of. Again, with the exception of that one little stab to the top there, we operated inside it perfectly. We came up here and now we are breaking out of the top of this channel, which is obviously very important. We came back down, retested it, held as support. So we're getting that continuation now. We want to see how high that takes us. But we have some clear targets in mind, and then once again, we spoke about the descending triangle that was taking place here in red. Again, we have this poke up out of here. So is it possible that this descending triangle can still be validated? Well, yeah, for sure. I mean, we could easily get something like this, and, this isn't done yet. We could very easily get basically a pattern that looks a little bit more like this. So, we're definitely not out of the water yet on this. Again, like I said, just because we have gotten a bullish move back up here and it looks good, we would expect this to underperform because we're overall in a bearish trend. And again, this still looks like a gigantic head and shoulders pattern. This is a very clear left shoulder here, a very clear head here, and now we have a very clear right shoulder here. The longer we can operate up here and stay above these key support lines right here, the more we can invalidate this pattern, and then we can see continuation to the upside. That is absolutely what we want to see, and then this can look more and more like a Wyckoff accumulation pattern after Wyckoff distribution takes place. So again, while it's too early to tell, what we're looking for is basically a consolidation in this range, oscillation, and then a series of higher lows and then higher highs. So once again, taking out this level is key right here where we're at basically, and then the next key level up here at like 40,000, and then after that we want to come up and start retesting these failed support lines that we broke down from. So again, seeing some nice price action. Definitely want to see some follow through though, but we're not out of the water yet. We definitely need to be careful at these levels, as this is exactly what I would do if I was trying to trap people in a position. You know, basically push the price up through some key resistances, you know, get them to buy into the momentum and then sell, take that dumpy dump on their face. But let's talk about some good stuff again here, as again, Bitcoin is showing some positive price action. What are some key things that we pay attention to always? The 8 and 21 cross on the daily. Obviously, we have talked about this quite a bit. You know, there are on the actual price action right here, we can see there's a couple times where we did get some false alarms, but basically from our let's go from after the head and shoulders action right here, and it broke down. You know, we got the cross of the 8 and 21 here. It was invalidated, but we put in a higher low, and then we got the cross right here again at $10,000. And then from that point in time, from 10,000, we came down here and we never crossed the 821 to the downside until right here. This was around Elon Musk area when he saved price action by saying Tesla bought Bitcoin. Again, we got the cross down. We immediately got the cross right back up, you know, a week later, and then continuation to the upside. Again, save the cross right here. And then finally, we got the cross down here at 58,000. So, you know, from 10,000 to 58,000, all you had to do is just buy in on the 821 cross and then sell on the 821 cross to the downside. And if that failed, you go back in. So I do want to remind you guys also, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Once we came up here and put in a lower high and then got the 821 cross again to the downside, it has then been selling off violently, lost over 50% of its value, attempted to cross back to the upside here and failed. And now here we have successfully initiated the cross back to the upside. So if you didn't buy into the key resistance, you know, break, if you didn't buy into any of this right here, if you're still not sure about price action, you know, I personally like to trade the 821 crosses. We are still below the 200 exponential and simple moving averages, but again, you know, you can wait till we get back above them, but I don't really want to wait to get back above 44,659 before I buy into it. We are very close to the 200 simple rolling over to the downside and the 200 exponential rolling over to the downside. We will notice here also on Bitcoin, this is where the 55 exponential crossed under the 200 exponential. This is our death cross. The death cross took place basically at our low. We came slightly lower within a couple of percent, but so far that was basically the absolute bottom. So anybody that sold the death cross, you know, basically is a moron. And then obviously if we look at the simple moving averages, here is our 50 simple crossing below our 200 simple. So again, you know, that's our death cross right here. We did go slightly lower than that, you know, another whatever, $7,000 down. So I guess as long as you bought back in, you know, you're better off. But typically people look for death crosses and golden crosses for like long trending moves. So you know, if you sold out of Bitcoin expecting a long trending move to the downside, probably was not the best indicator. That's why I like to use important things like the 821 that are still dynamic and it can be used like functionally. Does this mean now that we have crossed 821 back to the upside that we're just going to go parabolic? No, we could very easily see a situation like this, but we get across to the upside and then it fails back to the downside. I'm not going to get overly bullish on these markets, but again, we left the bearish control zone. We got the hard buy signal. We have put in a bunch of bullish divergence on the daily. We have a slope line. We're above the slope line. We have all green histograms. There's no reason to be bearish, inside this market right now, with the exception of being underneath the 200 exponential and simple moving average. So as long as we're dynamic in these markets, we pay attention to the 821 cross. If this all of a sudden gets rejected, comes back down and crosses back to the downside, we'll get out of our position. If this comes up here higher and then comes back down, crosses the downside, we'll get out of our position. You know, I'm not just going to say, oh, I'm a hodler now because we crossed the 821 back to the upside. That's it. We're bullish. No, it doesn't work like that. You know, I'm a trader. I'm going to trade based on what the chart tells me, you know, based on where it tells me to get in and out, etc. So We do have obviously something to pay attention to. Let's still look at our longer time frames though. This is the move we've been talking about. This is 100% what we've been expecting. We basically bottomed out here and then we came back up. And what are we trying to do? Well, we're trying to basically stop this cross from being validated. Although the 821 crossed on the weekly already to the downside here, we never really came back up and tested it. So this is us attempting to come back up and test it. I would expect if there's any bullishness left, now that the bulls are waking back up, that we would come up to at least 38,850 and retest the 21. Because if we can get back above the 21, there's no more resistance over our head. If we get rejected right here at the 8, again, it's going to look very bearish. If we get rejected at the 21, it will look slightly less bearish, but still bearish. If we can get above the 21 and consolidate, I will be extremely bullish back in these markets. Because again, the weekly 821 cross will happen just by consolidating above like 39,000, at which point in time, it will just be, one of these little situations where we basically had a move up, fell down below the moving average, and then went to the upside. But it is important to pay attention to, on the weekly, we had this cross to the downside in May of 2020 at, price action was at like 9,500, somewhere around there. So about $9,000, let's say, roughly. We crossed 821 to the upside on the weekly. We crossed 821 back to the downside, and price action was at 36,000. So that was our move to the upside. This is our move to the downside. Are we going to see follow through, or are we going to invert this cross? We really need to pay attention. But again, that's on the weekly. So we could easily see a day or 2 days or 3 days worth of bullish price action. We could easily push back up here a few $1,000s and it could fail. But we need to pay attention to that. We need to stay dynamic in these markets. But as far as I'm concerned right now, still looks very bearish on the weekly. We still have all green, I'm sorry, we're still inside of the bearish control zone here. We're still below the slope line and it is red, but we have 2 green histograms now on the weekly. So now granted, this weekly has just opened, so this could easily be a green and then this could flip over to a red. But typically the first sign of life on the TJD TDMACD is being below the 0 line and 2 green histograms. The same way that the first sign of selling is being above the 0 line and 2 red histograms. So if you would have took the signal that this was the top here, price action continued up another couple $1,000s, but then it sold off 50%. So if you're going to take this as being the bottom, yeah, maybe you missed the entry by a couple $1,000s, but maybe we go up another 50%, so it could easily take us up to like 45,000. And again, that's not how we measure everything. We are still in an overall bearish predominant trend on the weekly, but it's looking much, much better. Let's look at our monthly now. Again, the monthly just got the hard sell signal, all red histograms. We still have about a week left to try to save this, which is what I predict is taking place right now. We need to get back above the 8 moving average. Again, 37,000 on the monthly. Again, everything that's pretty bearish on the monthly. We could easily get rejected right here at 37,000 roughly, and then come back down here to 26,000 and just oscillate inside this range. It's very possible, very, very possible, especially since we didn't actually touch the 21 on the monthly. That's basically what happened here. We broke down from it, tried to push above it, broke down from it, and then we just oscillated in that range. This was when everyone basically gave up on Bitcoin. It had sold off down to 7,000 and the bottom was here at like 6,000, and it was basically just oscillating for 6 months. It basically went sideways and then finally broke down through and lost another 50% of its value. So is it possible we just go 6 months sideways right here and then capitulate into the bear market? It is 100% possible. Is it possible that we break back above the 8 and then we see continuation to a new all-time high before this 4-year cycle tops out? It is 100% possible. What is the probability of those two things happening? Well, I'll tell you this right now. In order for us to ever go higher, in order for us to make a new all-time high, in order for this to be bullish on the monthly, we need to close a monthly above 37,676. It's a fact. Because if we can't get above 37,676, we definitely can't get above 64,000. So for me, the defining factor is a close above 37,676, and I will be legitimately looking at this as bullish potential. Now, we still have to be careful that we could get rejected at one of these previous closes and then put in a lower high and then just sell back off like we did here. We came down, we came back up, put in a lower high right here, and then sold back off. But at that point in time, I would be once again dynamic in the market, paying attention to these key levels. So Let's look at what we really need to be careful of. And for the record here, I think there's a very high likelihood that we top out here in between these moving averages at like the 55 exponential or at the 89 or 200 exponential. I think there's a very high likelihood we top out here and we come straight back down to 32.9, 33,000 and retest that cross. What we need to see is, does that hold? Is that the best possible place you can take a trade? 100%. Because there's a tiny little area where you know if you're right or wrong. If we don't break below the 821 cross, we're going to just keep going up. But if we break below it, we're going to keep going down. And it's just going to be like a failed cross like this. Or like this is a perfect example of what could happen that would be bearish. We cross back to the upside here. We get no follow through. And then we cross straight back to the downside and capitulate. That is overall probably the more likely scenario at this point in time. Because we're in a bearish downtrend. We're in a bearish downtrend on the daily. But what could happen, what could have happened is we could have gotten rejected like this and never even closed it, which is what could happen on futures. So let's go over to our futures chart now and see what we really need to pay attention to. The futures chart is important because we got all this bullish price action over the weekend. So we now have a gap from basically where we closed. We have like a 7% gap right there. So, could we basically come up here, retest the 200 exponential, retest, this is a perfect example too. This is our 50 going below. This was our death cross on the futures chart, the CME chart. This was our death cross here. We haven't actually gotten the death cross on the exponential yet. So is it possible this is just a retest to try to get back above the 200s before the slope line rolls over? 100% is definitely possible. And then we just get rejected and come back down. Maybe regardless of what happens, we get rejected, come back down here and retest. We have not gotten the 821 cross yet, but it's going to happen fast if we stay this far above the price action. But we could easily come back down here and close this gap. I would not be surprised to see. To tell you the truth, if this is bullish and we're going to continue to the upside, I think futures will come back down or Bitcoin will come back down to like 33,000 and it will get aggressively bought back up. If it's bullish, 33,000 gets bought back up, continue to the upside. If it's bearish, we get rejected here, we come back down and this fails to hold and we see continuation, and then eventually the break of that triangle we drew. So I have to pay close attention to it. And again, full disclosure, I am in a long currently. I'm long Bitcoin and also Ethereum and also some shit coins as well. The shit coins look much worse. Ethereum looks decent. There's a couple shit coins that look good, but overall they look terrible. The only reason I'm long some of these shit coins is because Bitcoin looks good. And let's be real, none of them matter. They're just going to do what Bitcoin does, with the exception of like one here or there, which will just temporarily operate on its own like a meme stock. So the futures chart on the weekly, again, we got the cross 821 on the weekly here. We held the 50-55. We're trying now to get back above the 8. If we can get back above the 21, if we can get above 38,800, it's going to look very good. If we can cross this back to the upside, if we can get a couple green histograms in a row, it's going to look very good. But right now, it's still extremely bearish. Extremely bearish right now. This to me looks like an overdue dead cat bounce. We sold off over 50% and barely got any price action to the upside. We basically just went sideways. So this to me still looks very bearish. It's just a reaction or reflex rally because we can't go any lower. We ran out of sellers. It doesn't mean that there's actual buyers. We just ran out of sellers. So we have multiple red histograms in a row. We have a hard sell signal on the monthly. We have 5 days to avert that. So whatever happens this week is key. If we cannot get back above the 8 moving average at 37,300, this is just going to sell back off to the 21 at 27,400. Again, we could just chop sideways here and then capitulate through it. We could easily chop sideways and then burst to the upside. But the truth is, if we cannot get above the 8 moving average, we cannot get into a bullish situation. We cannot take on a bullish posture. There's still a decent amount of resistance above our heads. But, this could easily just turn into a bullish consolidation. We just have to wait and see how it develops. Make sure we lock in our gains along the way, so we don't just get like a pushback up here, and then basically just go negative. You can, there's many ways you can take care of a situation like this. Like for me, as we start to get more and more bullish, as we start taking out key levels, as we start getting above key areas, I'll continue to add to my position as it looks more and more bullish based on my predetermined set of indicator and oscillator crosses. So just to discuss those for a minute here, let's look at the TJD TDMACD. Obviously, we have our bullish divergence taking place. 3 drives of bullish divergence to me is a good sign. One here, and then a third one here, one here, and a third one here. Bullish divergence on the daily. While I do expect it to underperform because we're in an overall bearish downtrend, it does look good to me. And then we have a low right here on price action, a low right here, and then we got a lower low here. So it does not have a third drive of bullish divergence here. So it's a little less reliable because all my indicators aren't agreeing. We are still below the 200 exponential and simple moving average, so it's hard for me to get completely bullish based on our moving averages, but we're about to cross the 821 to the upside. So after we cross the 821 to the upside, after we consolidate above the 200 exponential and simple, I will start to be bullish for an overall trend move to the upside here. And then finally, if we look at our stochastics, we have left the bearish control zone. We have the hard buy signal. So, we're back into the neutral area, out of the bearish area. So that looks good. Do need to be very careful of our knife price action right here, as the knife is like already up into the bullish control zone. And then finally, the green histograms are sign number 1 here. Sign number 2 is being above the 0 line, which we're not quite above the 0 line, but we are above the slope line, and we have flipped it over blue. So we have 3 out of 4, or like 90% bullish on the daily for our TJD TDMACD. So overall, this is how trends reverse. This is how uptrends turn into downtrends, and this is how downtrends turn into uptrends. So has it happened yet? No, but we're seeing some very clear signs. For me, the biggest sign was closing above that 30,675, invalidating that 4-hour bearish divergence we talked about in the previous video, validating our bullish divergence that we talked about in the previous video, and now potentially getting that 821 cross to the upside. We do need to see what happens here in this area, and I will not hesitate to take profits and exit a position, if this starts to look bearish. But I think there's a very, very high likelihood that regardless of whether we push up here to like 40,000 or get rejected somewhere on the way, I think there's a very high likelihood we're coming back down to 33,000 to retest this cross before it gets validated on CME futures. We talked about the crosses. We talked about the false signals. Let's look back here at the CME chart. Here where we got that cross back on the CME chart at 10,000, we came all the way up, and even with Uncle Elon's tweets, we never got rejected. We never actually, at that 32,000 level, the CME futures chart never crossed to the downside. Here, Elon saved us with his cross and buying Tesla. We had already crossed on the spot market chart. Here, we did not get the false signal. The same way here at the top, we did not get the false signal. Once we broke below the 821 right here, it never was able to cross back to the upside. Here, it almost does, but it never does. So this chart to me is exponentially more valuable because it has given us 0 false signals based on moving averages. So if this cross takes place on the futures chart, it is exponentially more valuable and exponentially more weighted than our traditional markets are. Let's be real. Anybody that's buying Bitcoin on the weekends is a moon boy crypto cultist. Let's be real. Like the actual Wall Street traders, the people that are just trading this for money, I shouldn't say anyone, but the real investors, the real traders, the smart money is not doing this on the weekend. They're not buying spot Bitcoin on Coinbase. Okay. They're trading, actual futures charts and whatnot. So to me, this is much more valuable because we're going to see more bullish action when it's only cult members, buying up Bitcoin on the weekend. So that tells me that if this goes to the upside, Wall Street has got our backs. So who do you want to have your back? You want Anthony Pompliano to have your back? Or do you want BlackRock or something to have your back? I would rather have actual institution money. I would rather have actual investors than cult members having my back. But that's just me personally. We're more likely to get continuation if there's real money in the space, not just like Max Kaiser. So, but that, again, that's just my opinion. So overall, bullish. We're starting to see the signs that we could basically be, bottoming out and getting ready to have some moves to the upside. So I'm going to grab a drink really, really quick. And mute it real quick, and then we'll continue on with some crypto. All right, so let's take a look at Ethereum next. Okay, so Ethereum, we got the cross back here right before that capitulation dump. We did not cross it back to the upside. We barely crossed it back to the upside right here and immediately got rejected. And now here we have crossed again on Ethereum. You'll notice that Ethereum is already above its 200 exponential and simple moving averages. They are still sloped neutral or to the upside. And we're at the 89 exponential moving average. So moving average wise, if we can literally close a daily above 22,450, we have no more moving average resistance above our head. Obviously, we still have all this above our head, but getting above all those moving averages is crucial. After that, consolidation is all we need, and then eventually we'll get a move to the upside. We have obviously a hard buy coming out of the bearish control zone. We have obviously retested the slope line. The slope line is blue on the TJD TDMACD, and we have only green histograms. That looks great. It looks absolutely great. And then here you'll notice also Ethereum looks much more bullish on the weekly. It did exactly what we said. Came back up here and tried to avert the cross. It has technically stopped the 821 cross from happening. So again, you notice on Ethereum, we had no false signals. From when Ethereum crossed to the upside back here at $180, $180. Once we cross to the upside, we have not crossed this to the downside. So Ethereum has remained in a bullish uptrend this entire time from $180. Technically, if you were waiting to get above the 200 exponential moving average, you could have argued $263 was when you got bullish on Ethereum. But we do need to be very careful. We have the sell by sell, left the bearish control zone. Bullish control zone. We're inside the bearish control zone, and we have all red histograms on the weekly, and then also blue slope line. We're well below it. It is getting ready to flip over red. So this is basically last chance for Ethereum to save what has already happened to all the other shitcoins. So Ethereum still by far the best. Still above the 8 moving average. Did get the hard sell signal, but still all green histograms. Still above all its moving averages. Still consolidating at all-time highs. Ethereum is by far the best, with the exception of some random shitcoin that I probably have never heard of. I'm sure there's one or two out there that have a better chart. Let's look at the Ethereum to Bitcoin chart and see what's going on. We have consolidated basically inside this range for some time now. Got the hard buy coming out of the bearish control zone. We are above the slope line now. While it is still red, we are at or above the 0 line here. We're trying to cross the 821 to the upside. If we can move up here, what does this tell us? It tells us that Ethereum is probably going to be more bullish than Bitcoin if we can continue here and continue to the upside. Ethereum is better place to be than Bitcoin, theoretically, based on this chart, and that's all. And then also, if we look at the weekly chart, again, we crossed on the weekly chart back here, 821 to the upside. Back in February of last year. We averted the cross here. We did cross back down to the downside here, and then we got back above it here. We almost or slightly crossed it down to the downside here, and now here we're consolidating at the top of the range. If we can stay where we're at right now at like 0.06 roughly, I think we'll get continuation to the upside. This is starting to look more and more like a bullish reset. The indicator oscillator is going down while basically price action goes sideways. That's good. It means we're holding this level while the indicator oscillators reset. They are refueling the tank. This to me is doing similar to what the dollar is doing, but instead of, basically putting in higher highs and higher lows, we're putting in slightly lower highs and lower lows, but we're just basically holding this area while we reset our indicator oscillator. That's huge. That's what you want to see. We're just building up strength. We're putting more gas in the gas tank so we go to the moon. 821 cross back here on the monthly at 0.03. ETH to Bitcoin on the retest, and now we've gone parabolic. We're trying to get back to all-time highs. Not quite there yet. We are at some key resistances, but holding for now. So if we hang out here long enough, we'll go to the upside. So ETH to Bitcoin looks good. Ethereum looks like it's going to be stronger if everything stays how it is currently. Doggy Dogecoin. Let's take a look at the old Doge bag. The old douche. This was our key channel we were paying attention to. Got the break basically right through here, consolidated on top of the channel. It looks like we're now going to get the measure move. Measure move would take us up to roughly 27 cents. 30 cents is going to be very, very hard for us to get back above here. If we get above 30 cents though, we can basically work our way through all this resistance and move to the upside. This chart's basically useless though, because we moved up so fast. You really can't get anything from the moving averages. We're trying to fix that 821 cross before it happens. Again, that's going to run in at like 22, 23 cents. If we close back above 21, 20, 22, 23 cents, the 821 on Doge crossed to the upside at 0.0028 cents. So at, what is that? At like 3/10 of a penny, not 3 cents. At 3/10 of a penny, Dogecoin looked bullish, and it almost looked bearish here at 22 cents. So that's like 100x basically. So yeah, again, those 821 moving crosses can really pay off, if you believe in them. But I'd rather believe in them than unicorns and Santa Claus. So next we have Uniswap. Uniswap is, putting in lower lows continually here, trying to cross this 821 back to the upside, still below the 200 exponential and simple. This one looks weak, but is trying to carve out a bottom here. 821 has crossed the downside. Again, key levels are $20 and then getting above the 21 at 21.85. If we get back above that, it's going to look good. We could potentially cross this back to the upside. But, bearish control zone, all red histograms. Look, let's be real. There's little to no reason to even look at altcoins right now because the entire market is just hinging on what Bitcoin does. If Bitcoin keeps moving to the upside, all the shitcoins going to move to the upside like the tumors that they are on Bitcoin's back. If Bitcoin goes to the downside and starts to die, they're just going to die faster. Because obviously if the host dies, the tumors die as well. So that's what we're paying attention to. Chainlink. Chainlink is looking slightly bullish here. It got that same bullish divergence here that Bitcoin got. 1 low, 2 low, 3 low, 1 low, 1 higher low, 1/3 higher low, or a third higher low. But also did not get the bullish divergence on the Stochs here. Hard buy signal coming out of the bearish control zone. We did get a false signal right here, but this one's much more reliable because it's not spaced out in the same way. I like how this looks overall. 821 needs to cross back to the upside. We're below all the moving averages, though. It's going to be a hell of a time to get through all these moving averages, but if we do, it's just going to be a stair step, one after the other. One push up, one consolidation, push up, consolidation. Once we get above $27, basically a 50% move to the upside, this thing will look real good. Until then, though, it's going to be struggle bus city. We're barely hanging on to the 89 here. We have the 821 cross to the downside here. Next target is going to be that $20 range. It's a nice round number. There's a cluster of moving averages there. If we can get back above that, that's going to be key. If we get back above $23, that's going to be key. And then after that, we just got to chew through all this selling. But again, let's look at the 821 and why it's so important. 821 crossed to the upside on Chainlink at 34 cents. It then, had a couple little false alarms here. This was a kind of cross, and then we finally got the cross down at $28. So from 34 cents to $28, the 821 cross on the weekly was reliable. So that's roughly, in my math here a little bit, roughly an 8x. So 80 times your money. So if you put $1 in Chainlink, it would be worth $80. So there's strong reason to trust in the 821 cross. Okay, and then Polkadot. Again, Polkadot barely hanging on to this key level, sort of stabbed down out of it. Again, the bullish divergence playing out here. This one had bullish divergence here as well. So we had triple bullish. Oh no, it didn't on these last 2 points. So it did have triple bullish divergence on the TJD TDMACD. If you don't understand why I'm saying that, we have a low right here. We have a higher low right here. We have a third higher low right here and a retest of the blue slope line. We have a low right here, a mid lower low, and then finally a lower low. So yeah, bullish divergence. And now where do we get a pushback up to? Well, if we cross 821 to the upside, we're coming back up to the 50-55 at like $16 to $17. If we get the move after that, 89 to 200 exponential at $20 to $21. If we get back above the 200 simple moving average at $26.95, this will look extremely bullish. But again, Bitcoin rolls over, this will just die. Polkadot 821 cross was way back here at $26. So over 50% of the price action to go, it would have had you out. So before it ever crosses back to the upside, it's going to have to get back above like $21, $22. So is it worth taking a stab at this thing right now and just, pulling the trigger and praying? You go pull and pray? I mean, maybe, but that's not how I trade. So we'll have to see what happens. But again, it's all up to Bitcoin. Solana. Okay, so we've been paying attention on Solana to a couple things. It is close to getting that 821 cross. Does have a hard buy signal come out of the bearish control zone. Does have multiple green histograms, but not above the slope line yet or the zero line. So not particularly bullish here. We have a very clear resistance here. You know, there's a lot of ways you could draw this. You could draw it like this, and we have close here, close here, close here, breakout, hold, fail, rally, break back under it, come back up. But I don't really like that. I think, to me, I think something like this is a little more reliable. Something roughly like that. You know, we have a high here, and then we couldn't quite get to it, couldn't quite get above it, get rejected. We have basically like a throw over, a failed breakout, and then sell back off. And now here it looks like we're trying to break out again. Could we easily get a failed breakout again? We easily could. We'll have to wait and see. Where do we go? I mean, we got rejected basically at the retest of the 236. After we broke down below the 618, we came back up to the 236. Then we came back down to the 618, but didn't close below the 0.5 here. So decent. Come back up, couldn't get to the 236. Come back down to the 618. So now we're above the 0.5. I think next key area to pay attention to is like $31.50. If we can get above that, this high here will be trouble, you know, or $40. So again, you know, once we start chopping through these resistances, through these moving averages, there's definitely some potential for this. But right now, I mean, there's not a lot of price history on it, and it looks pretty bad. But again, if Bitcoin saves the day, all the shitcoins will pump as well. So just vote on Bitcoin. And, you know, if everybody just took all their money out of all these shitcoins and put all their money into Bitcoin, like right now, Bitcoin would just immediately break out and go to the moon. All the shitcoins would go to zero where they belong, and everybody would get rich. But instead, everybody joins their little cult, wastes their money on some shitcoin that has a 95% chance it's probably going to zero or already a complete scam. But, you know, whatever. And again, when I say shitcoins, I'm typically not talking about Ethereum. I'm pretty much talking about everything but Bitcoin and Ethereum, and like probably 5 altcoins that I can count on one hand. But until they prove themselves, they're still going to be referred to by me as shitcoins. But it doesn't mean that I don't like them. It doesn't mean that I hate them. It doesn't mean that you shouldn't own them. But they're shitcoins until they prove otherwise. And that's a fact. This was a request from one of the group members, Ave. You know, we're hanging on to 200 exponential right here. We have put in a higher low right here. We have basically come back down, retested the blue slope line. We got the hard buy signal coming out of the bearish control zone. You know, looks decent. Got the 821 cross back to the upside. Got to chop through some resistance here, but it looks like 308 is our next target. After that, 347. And then after that, we just got to worry about all this resistance overhead here. On the weekly, I'm assuming this does not look that bad. Yeah, just barely got the cross on the 821. Looks like we're trying to save it now. If we can break back above this level on the weekly, you know, again, this has all been bearish right here. But is all this really bearish, or did we just go sideways and completely reset the indicator oscillators? Because the Stochs came from the bullish control zone to the bearish control zone. The histogram came all the way from 142 down to 0. But really, what did price do? You know, we were realistically at like $473, and now we're right back at $300. So yeah, I mean, it's down 33%, but now we have a complete full gas tank ready to roar to the upside. So, but it'll probably go to 0 if Bitcoin sells off. But if not, it'll probably go to a new all-time high. So key resistance would be that 526, that weekly close right there. And there's a ton of resistance on the way, but overall doesn't look bad. Overall does not look bad. It's above the 200 exponential moving average, which is better than 75% of cryptos right now. And it did get the 821 cross already back to the upside on the daily. So again, it's better than 75% of cryptos. But I mean, that doesn't really say that much. ADA, Cardinal bees, you know, basically topped out back here at $2.30. And then since then is down over $1, over 50%. Still has not crossed 821 back to the upside. It is above the 200 exponential and simple moving average, which is good. Got the hard buy signal coming out of the bearish control zone. Got multiple green histograms. Has not flipped the slope line back over blue yet. Looks decent overall in comparison to the majority of shitcoins. Looks good. It has so far averted the 821 across the downside. If it gets back above $1.33 on the weekly, it will look good. It has lost the slope line is still blue, but we're well below it. all red, all selling, and these Stochs are crossed to the downside very powerfully. Did get the hard sell signal at the top of the range. Overall, Charles Hoskinson is a bum, but Cardano looks okay. Okay, so where we go? Cardano. Oh, XRP, the fan favorite. Everybody love it at XRP. On the daily, looks decent. Trying to cross 821 back to the upside. Still below 200 exponential and simple moving averages. If we get above this area right here, next move 68 cents. After that, there's just a clusterfuck of, you know, just all these moving averages resistance. But essentially, if we close above like 78 cents, I mean, looks good. If we close above 78 cents, you know, we have that same bullish divergence taking place. 3 drives of bullish divergence. 1, 2, 3 drives of bullish divergence. Is XRP garbage? Yes. Yes, arguably. It is definitely garbage. Are they currently involved in a serious court case? Yes. If they win that court case, would I expect XRP to burst to the upside? Sure. 821 on the weekly has crossed the downside. I think more likely than not, we're coming up to 69 cents to retest that. Maybe 75 cents. Is XRP the biggest laggard of all time? Yes. It's total trash. You could literally put your money anywhere else, anytime, and do better. You could literally buy any other crypto with the exception of Dash, and you would do better than XRP. XRP did not make a new all-time high. It will probably never make a new all-time high. But can you make money in the meantime off it? Yes. But would you be better off just quitting XRP and buying literally any other crypto except for iron? Yes, you would. You would. And Dash. Dash is equally trashy. But yeah, overall, XRP looking subpar. Bitcoin dominance. This is key here. You know, Bitcoin dominance obviously put in a serious low back here in January 2018 at the top of the bull run, top of the previous 4-year cycle bull run. And then now, you know, look, we have put in a very clear swing low here, and it looks like we're putting in a swing low here. So does that mean this is the top of the 2021 bull run? I mean, honestly, probably. If it keeps going up to the upside here, yes. If it goes up here a little bit and then comes back down and puts in a lower low, then no. But right now, it looks like it probably is. Could we easily do something like this, though, where it looks like a bottom, we come back up, and then we sell back off lower, and then we get another, like, you know, 4 months, 6 months, whatever? We 100% could. We most certainly could. This literally happened in August of 2017. It looked like Bitcoin was putting in a bottom, came back up here, and then got rejected at the 50-55. So it looks like Bitcoin's putting in a bottom, comes back up here, and gets rejected at the 50-55 at like 55-56%, which is roughly the move I'm expecting. It 100% could, and we get basically what amounts to a, you know, multi-month rally, and then altcoins go parabolic, you know, in like January 2022, while Bitcoin goes sideways or sells off. Definitely could happen, and it would perfectly fit the 4-year narrative. It would perfectly fit exactly what I said about the August bull run in Bitcoin resuming. There's a high likelihood. If you look at history on Bitcoin, we almost always, all of our most powerful moves happen from August to December. All of our parabolic uptrends happen from August to December. So is this going to be that, like, you know, second push bull run, that second thrust bull run to a new all-time high before our multi-year bear market? Maybe. I mean, but we really got to wait and see. Who knows right now? But we are above the 8. We're coming up to test of 21 at 50. After that, coming up here. But, I mean, let's be real, guys. I just tell you what the charts are saying. You know, I put my opinion in about, like, Charles Hoskinson being a bitch, but actual technical analysis is technical. I'm not talking about fundamentals. I'm not like, yeah, but Charles said Goguen and this, that, and the other, and XRP, and no, I don't give a shit about any of that, because that's all garbage. The only thing that matters is investing in things with strong fundamentals and trading based on technicals. Okay, there's other people that can, you know, tell you how cute your kids are or how attractive your wife is. I'm gonna tell it how it is. So if you got ugly kids and a wife, don't ask me if they're cute, because I'm gonna tell you the truth. If you invest in shitcoin projects that are total garbage and their charts look like garbage, don't ask me to look at them if you don't want to hear the truth. But you guys all know that, because everybody else unsubscribed. If you're new to the channel, or you've been here a while and you're tired of me talking about your ugly wife and your ugly child or your shitty crypto, I'll give you a moment to unsubscribe. But I'm going to keep doing TA in the meantime. So But if you're new to the channel and you like people who tell it how it is and do actual technical analysis, please feel free to like, subscribe, and share with your friends. Or if you just find me entertaining or you like my voice, also you're welcome. So welcome to subscribe. I didn't mean like you're welcome that my voice is cool. So total market cap on the weekly, again, same thing. We are trying to come up here and basically avert this 821 cross. It has technically already taken place, but we're just trying to get back above it. We're at the, 1.5 trillion mark. If we can close right here on this weekly, a week from now, basically, because obviously it's just opening, we could easily cross this back to the upside, continue to the upside, new parabolic run, new top, new high, but we could also just put in a lower high. So really got to pay attention to what's actually happening and not just what we want to happen. While we're here, we'll look at our crypto-based stonks as well, and then our meme stocks. Coinbase on the daily, I mean, this thing, let's be real here. It basically has done nothing but just continually sell off, but it did put in a low back here. It did put in a higher low right here, and then it did put in the same low right here. Why I hated Coinbase again, why I think Coinbase is a piece of shit again, not just because I hate the actual company and they suck, but because of the chart, because of the technicals, because I will trade it even though it sucks if I'm going to make money. But here was our 821 cross. Here we look bullish, okay? But then here we got the 821 cross back to the downside. So in order for this to be bullish again, we need to cross the 821 back to the upside. So until we get an 821 cross back to the upside on Coinbase, it is still a total piece. Total garbage, and I have no interest in being in it. So I would rather buy at a higher price than just guess that it's going to be bullish or bearish, because there's no reason to make these 3-hour videos. There's no reason to do any of this technical analysis. There's no reason to learn anything. You can literally just flip a coin if you're just going to flip a coin or flip a Coinbase. Riot blockchain, we'll see. This thing's probably going to get a burst to the upside in all reality, because Bitcoin has had a powerful move to the upside, and this is just, it's like a shit coin. It's going to do whatever Bitcoin does. It's obviously mining, but this is what we were talking about. Basically had a descending triangle, broke down from it, got our measure move, came back up, retested it as resistance, double top, sold back off. We have now put in a higher low. I expect a burst back up here, potentially to or higher than this. I imagine at like market open, this thing is probably just going to burst up like 25 to 50%. So that's what I'm expecting right now. I see Bitcoin is crushing right now, up to like almost 40,000. Absolutely beautiful. That's what we like to see, as expected. So I would expect, as long as this holds, Riot to do basically the same thing. MicroStrategy, or Michael Saylor scam coin. Again, I would expect this to push back up. It's still above 200 exponential and simple moving averages. Could easily get back up here. We want to see it above $668. GME, GameStonk. Again, 821 cross back to the downside right here. Told you guys, obviously 224, you get out. It's down here, 180, below the 90, 89 moving average. If we can't get back above the 8 moving average, can't get back above the 89 moving average, can't cross the 821 back to the upside, next target is our 200 exponential moving average, $135. GameStop. I mean, look, y'all better get together and short squeeze, or it's going to be game over real quick. AMC your ass later, because this looks like trash. Again, the 821 cross back at $50. I told you it was going down to $30. We went down to $30. We came back up. We got rejected at a lower high. We have a very clear rejection candle right here. And now here we are selling back off again. Could not get above the 8. Could not get above the 21. Looks like this is just going to get pushed back down to the downside. Again, we're going to retest like $30 to $32. We did get the hard buy signal. We are leaving the bearish control zone, but we got 2 days now of red histograms. I think it's very likely we see continuation to the downside. But, if the apes get together, stand in a circle, and, they all talk about how great their investment is for long enough, maybe the diamond hands can play off. But in all reality, based on the technicals, based on technical analysis, this looks like trash. If the 821 cross back to the upside, we could easily see new all-time highs, and AMC is great, and it's the future, and all of a sudden people go back to movie theaters, and it goes to a new all-time high, and all the cultists get their $1,000 AMC stock, and everybody wins, and they all drive Lambos and go to the movie theater in their Lambos. But let's be real. Probably not going to happen. Short squeeze is a short event that takes place, after which it goes back to being a bum stock. It just so happens that people have diamond hands and they're bum stock. That's all it is. So Bed Bath & Beyond broke down from that key level, came back up, retested it, broke down again. I expect it to come back down here to like $23, $24. We're seeing a little bullishness here on the chart, but we're just operating inside of a descending triangle. You could argue that it was a neutral pattern for some time, but it's very clearly not. I'm going to leave this in place for right now, but it's basically pointless. I mean, what we're looking at is very, very clearly exactly what I said. That we would come down, it would look like a neutral pattern, and then we would break down from it, and then it's going to look like a very bearish pattern. But in the same case as Bitcoin, a bearish pattern can still break to the upside. It just has a lower probability. So just like Bitcoin looked like it was very clearly putting a descending triangle, it could easily break to the upside and invalidate that pattern. 33% chance, 66% chance it plays out bearish though. Newegg, once again, meme stock trash. Actual company not, but meme stock wise it is. Consolidated in between the 8 and 21. Did so long enough and now broke down from it. Is it possible it comes back up here and tests resistance at like 27 bucks? Yes. Does it eventually come back down to $19.90 or $20? Yeah, probably. Looks like trash. And then DraftKings, DKNG. Again, putting in a higher low, overall decent, below the 200 exponential moving average, below 200 simple moving average. Looks like it's trying to cross the 821 back to the upside. You can just easily look at the weekly chart and see what's really going on right here. What's really going on? We crossed 821 to the downside, got rejected, could not get above the 21, crossed back up, trying to get above the 8. We'll see if we get above the 8 right here. If we do not, it's going back down to $36. If we do, next target is $51. If we get above $51, maybe we go to new all-time highs. We'll have to see. Hard buy signal, 1 green weekly histogram. Still looks terrible. We're still underneath the moving average and they're across to the downside. So, all right, let's look back at our critties. So yeah, Bitcoin getting that push up here, trying to push up. It's at the 200 simple moving average now on futures. Let's look at our regular chart. Okay, so this is exactly what we're talking about at the beginning of the video. So, it doesn't always happen within an hour of when I say it, but we closed at the heart line here, exactly like we were talking about. That was our daily close right there. And then immediately got the pushback up. Where did we get the pushback up to? Exactly the top of the channel. The blue resistance that we were talking about, we fell short by like $4 or something like that. Whatever. Sorry, guys. But look, this is still strengthening to the upside. We're getting a slight rejection right now. It's selling off fairly violently. We need to pay attention to what happens with the close here. Is it possible that this is really our pattern and it's just a sideways, sideways channel? 100%. But more likely than not, what will happen here? We'll either close outside this range, come back down, retest it, and then see continuation to the upside, or we will get a massive rejection candle right here, back down to 36,500 or lower, and then we'll sell back off to the bottom of the range. And this was just a short squeeze. We were talking about the short squeeze. We were talking about all this in the group recently. This is what a short squeeze looks like. When you all of a sudden come up to a key resistance level and then you break through it, it's a stop hunt. You're destroying all the people whose stop losses were basically at that invalidation level. So again here, looking at the daily, these were our key levels we talked about, again, at the beginning of the video. Now in real time, we get to look at them and see what's going on. So this was our key resistance we were at, 36,000. We broke above that key resistance. We came up and we tested our next very key resistance. So what we need to do, we need to get a close above 39,200. If we get a close above that, we then need to close above 40,711. If we get a close above that, we're coming back up here real high to like 50,000. We're going to retest some of these breakdown levels, 45,000, 50,000, etc. So this candle, this next 4-hour candle is going to tell us everything we need to know. The Stochs look like they're getting rejected, but we could easily just have these twist bearish, find support at the top of the bullish control zone right here, which is the non-highlighted area, and then just roll back to the top, and then we're just refueling right now. You'll see here we do it a bunch of times in a row, and throughout this range while we're doing it, what do? We just keep consolidating and going to higher prices. So we need to see now, is this a real move with follow through, or is it going to be a violent rejection? What we don't want to see is this whole candle get sold back into. So that's what we don't want to see, obviously. And then finally, let's look at our spot chart with the moving averages in place. Again, exactly what we spoke about. We came back up here perfectly. But, just rewind 30 minutes and watch a video and then fast forward to this part and be like, holy shit. 89 moving average and 200 exponential moving average. We came up perfectly. We're getting rejected currently at those 2 moving averages. If we can hold here long enough, if we can get a close above 38,500, I expect us to come up to the 200 simple moving average again at 44,659. Looking over here at the shorter time frames on my other monitors, I do not like what I'm seeing right now. This looks like total shit. It is possible that, you know, this candle gets bought back up right now, but the last thing I want to see is over 50% of our shorter time frame candle get sold off. So, but you'll never know what I'm looking at because it's on my other monitors. But yeah, honestly, this is what we're talking about with the knife too. The knife is at elevated levels. It's unsustainable. What we don't want to see here, we don't want to see the knife sell off violently like that, or like that, or like that. Oftentimes, you know, we'll see that move happen, and then that's the absolute top, which is what we use the knife for. Here is the knife rolling over, absolute top. You know, you can look back at some of these other ones. I like the more violent looking ones. This was the absolute top of the entire trend where the knife sold off right here. And then this one was the top of a nice move where the knife sold off right there. And then this one gave us beautiful divergence signal on the knife. We topped out right here and then kept moving to the upside. And then we put in a lower knife stab, a rollover, and that was beautiful bearish divergence. You know, what kind of move are we talking about after that? You know, 20-something% sell off. This was one. 20% sell off. This was one. You know, 27% sell off. This was one. 48% sell off. So, you know, if this starts putting in that violent move back to the downside, you know, what can we expect? You know, 20% sell off probably. So maybe we come back down here to that 30,000 range. Maybe we come back down slightly lower, 33,000, something like that. We'll have to wait and see. It'll probably happen during this video, the way things are going right now. Yeah, so that's it for our cryptos right now. And we can see too that we're actually seeing the futures chart is just holding steady right now. The futures chart is at 38,560. The spot market charts, you know what? Maybe I should look at something other than Kraken. Let me look at something really quick. Oh no, we got it on everything. Well, I mean, yeah, so all the spot exchanges, looks like we got a violent move to the upside and then sold into. On the actual futures chart though, it's just holding steady at 38.5. On the spot market charts, we got up to like 39.7. So a little bigger of a push there. But again, that's that Moonboy FOMO kicking in. Surprises me 0.00%. Jump over in the comments here, and then we're going to look at our commodities and such. Good evening, everyone. Good to see you, our kits. Oh my gosh, I got a Abubakar. Is that right? Abubakar Tanko? Yeah, it looks right. Abubakar Tanko, good to see you, my man. Don't recognize the name, but glad to have you. Don't you think this coins are highly parabolic to Bitcoin? Don't you? This coins are highly parabolic to Bitcoin. I think I'm getting what you're saying here, my man. Yeah, don't you think coins are highly parabolic to Bitcoin? Yeah, I would say that essentially trading shitcoins is like trading a leveraged position on Bitcoin. That's exactly what it is. Take aside all fundamentals, all everything, and basically all they are is they're just a leveraged position of Bitcoin. So I think that realistically, buying Bitcoin at spot versus buying altcoin at spot is the exact same thing as buying Bitcoin at spot or buying Bitcoin at like 10x leverage. You know, you're going to see some more violent moves to the upside, some more violent moves to the downside, but it's basically just like a leverage position of Bitcoin because they all move together. Occasionally you'll see something like, I think it was KuCoin and Matic the other day we were watching, and they both had like a little bit of uncorrelated movement. You know, basically like, I think as Bitcoin was like selling off to going sideways, I think it was KuCoin was putting in a new all-time high. But again, you know, for the most part, most shitcoins have nothing behind them. KuCoin is like an actual exchange, so there's more of a reason for it to be like non-correlated to Bitcoin. The same way something like BNB would be not correlated or as correlated to Bitcoin. But the truth is, and same with Ethereum as well. Ethereum actually does something. It's a legitimate platform, or a legitimate protocol that everything is built on top of. So it makes sense that it would do something like uncorrelated to Bitcoin, as Bitcoin has its own thing. It's like Big Daddy in the space, and then you have Ethereum, which is like useful, and a bunch of other things are built on top of smart contracts, all that good stuff. And then you have, stuff like KuCoin, which is like an actual exchange. And then you have stuff like Basic Attention Token, which is, basically like has a working project. And then you have all the other stuff that's basically just like a complete speculative asset, 100% of security. Like stuff like, Cardano serves no actual purpose. It's like a white paper and a dream. It does nothing. You're basically just buying in. You're joining a cult. You're buying into a financial cult. And same thing with like XRP. You're a cult member. That's okay though. That's fine. I go to church. Technically I'm a cult member too. It's just a matter of like what cult you want to join. Totally cool. If it helps you sleep at night or makes you money or makes you feel like a good person, by all means. But the truth is, until the fact of the matter is, in all reality, the reason I don't like shitcoins is because I know for a fact that 10 years from now, 95% of those shitcoins will be gone and dead. And in the end, Bitcoin will probably still be, up there. And then you will have like 5 or 10 other cryptos that actually serve a purpose that will do extremely well. But most of them probably don't even exist yet. Most of like I honestly believe with all my heart, we have good hearts. I honestly believe that the best crypto that's ever going to be, the one that goes absolutely parabolic, the one that has the most market cap ever, the best crypto probably does not even exist yet. Or maybe it has a name and a white paper, but that's it. So if you believe right now that you can look at 10,000 cryptos and you can pick out the best one, let me know, man. Let me know, okay? Because I'm glad to take a look at it. But in all reality, you don't and you can't, and I don't care. It's the likelihood of that happening is slim to none. You're not going to pick the next Amazon. You're not going to pick the next Google. You're not going to pick, whatever, the next Snapchat. The likelihood of that actually happening is slim to none, especially on something that doesn't have a working product. Once something has a working product, once something is like actually functioning in society and I can see it and we can see it together, I would rather buy into that knowing that it has, strong fundamentals, strong technicals, and like an actual purpose. It does something better than anything else does now. It solves a problem, whatever the situation is, then I will buy into it. Same reason I like Basic Attention Token. The Brave browser works excellent, still has flaws, but basically pays you to look at ads or allows you to not look at ads, but it does something better. If you don't want to use Google because you don't want somebody stealing all of your information, you can use a different one, or I'm sorry, browser wise. If you don't want to use whatever browser because it steals all your information, you can basically use Brave instead, and then you don't have to worry about it because it's a decentralized browser that's not stealing all your information. So that serves a purpose to me. That's why I really like, Brave. I really like the idea of paying people to look at ads or to use their browser and their background screen or whatever. So while it's not going to like change the world the way that eventually one of these cryptos is going to change the world, it's still useful, it's still functional, and it actually like exists right now. So that's why I like certain ones. Same with BNB, Binance. I don't use Binance. Otherwise, I would definitely be an investor in Binance coin. But, it serves an actual purpose. They burn it. It has strong fundamentals and technicals. It performed extremely well in this bull run. KuCoin, again, same thing. I don't use KuCoin Index, but, it's basically like baby Binance as far as I'm concerned. So, but yeah, let's get into our commodities here. So gold, still looking bad, man. We closed back below the 821, closed back below 200 exponential and simple. Looks bad. Everything looks bad. Hard sell. Red histogram. Looks like it's getting rejected. Gold looks bad. But why does it look bad? Well, because it's an inflation hedge and there's no inflation. I mean, it's easy. If inflation was a problem right now, gold would be going through the roof because gold is the #1 inflation hedge. So, and if you say Bitcoin is the new gold, well, you're technically right because neither one of them is doing shit. So I guess I'll have to agree with you, technically. On the weekly, though, we tried to save the 821 cross. Last time we got the 821 cross, we tried to save it. It failed and sold off heavy. Here we tried to save it. It failed, and it looks like it's getting ready to sell off heavy. Do we sell off to a new low? Do we sell off to a higher low at the 89 at like 1,737? Or do we go to the 200 down here at like 1,600? I don't know yet, but I think probably a new low. Hard sell signal, still red slope line. Came all the way up to the slope, got rejected. We're below the zero line now. Gold looks absolutely terrible to me. Absolutely terrible. So I hope you didn't pay too much of your premiums buying up that gold at the absolute top. Silver also looks bad. Below the 200 exponential and simple moving average. 821 have crossed to the downside. This is even worse because I know people were paying ridiculous premiums. To all the people paying $11 premiums or $7 premiums at $30 silver, just know that it's not your fault. It's the fault of the middleman. It's the fault of the silver dealers, not the actual mines. It's the fault of the online silver dealers and the pawn shops and everybody. Their greed and speculation on silver is probably going to mean that silver is probably going to be hard to get still, because you're going to end up with a bunch of dealers that paid way too much for silver and bought it at the top and then speculated and didn't want to sell it. So they weren't able to move it because they were charging too high premiums. Same way pawn shops were buying silver at like $30 and charging $5 and $10 premiums. Well, now they were trying to get $35 for their silver. So now if they charge a $5 premium, they're only getting $30 for their silver. So if they don't sell it all right now, they're going to be underwater on their silver positions. And what are they going to do? They're going to just put it in the vault and wait for it to go back up. So there's going to be a silver shortage because everybody who bought it is going to be upside down on their position, and they don't want to sell it at a loss because they speculated on silver. Same thing that happened with lumber. The mills speculated that the economy was going to shut down. Nobody was going to want lumber. So they stopped, basically, and now, well, they stopped processing timber and making lumber, and then the yards stopped buying lumber because they figured nobody was going to buy it, and then all of a sudden everybody came in and bought it, so then they couldn't get it, so then the mills were backed up. So it's literally what happens when people that run a legitimate business try to speculate on assets. What they should do is just run their business, not speculate, because there's a reason they're not speculators, because it's way easier to speculate if you're good at it and make money than it is to run an actual functioning business. Running a business is hard. It's expensive. It takes a lot of work. You have to have employees. You have to do a lot of paperwork. You have to actually do things and, help the economy grow. You have to provide actual materials, goods, or services. It's hard to own a business. It's way easier to just trade or speculate if you're good at it. If you're bad at it, though, you just lose all your money and then you go work for the man. So XAG silver got the cross to the downside for the first time. We got the cross to the upside at $16 on silver. So if you bought at $16 and you sold now, you basically made $10 on each one of your silvers. So yeah, that's good, but looks like crap now. If we break down from the 55 exponential, next target is $23 silver. So what's $23 plus your $5 premium? So you should be able to get silver for, well, probably $4 or $3 premium at that level. So if you can find silver, it'll be like $26 or $27 an ounce if we break down from here. And then after that, silver will go down to $20.60. Hopefully that does not happen, because there's going to be a lot of people who bought silver eagles for like $40 and $42, and they're going to be worth like $23 and $24 again. So, but I do love gold and silver. But I tell it how it is. So here we got our XAU to XAG chart. This is our gold to silver. Let's see what's happening here. So we got the gold to silver flip back here at 100. That means it was 100 silvers to 1 gold. And now we have the flip between 821 back. So this whole time you wanted to own silver. And now this we flip back up. And now you want to own gold again. So we have the hard buy signal coming out of the bearish control zone. We have weekly bullish divergence taking place on both our indicator oscillators. We have multiple green histograms. We're above the slope line. We're above the zero line. We have the blue slope on the TJD TDMACD, which if you're not using these indicators, they are available for free on TradingView. You can go down to the description and I tell you what they're called and how to find them. We have now the 821 cross back to the upside. So are we going to go back up here? Absolutely parabolic. And it's better to own gold than silver. Yep. What does that mean? Gold is going to be going up very fast here, or more likely than not, gold is going to be going down and silver is going to be going down much faster. We broke out of our 2 descending triangles. We have moved here out of our, basically out of the triangles, out of the wedges, I should say. And now we're getting that move to the upside. Again, you know, if you remember how long ago I drew this chart, this chart has been in place for literally months after months after months. We had this initial red triangle here, wedge here, and then we had this orange wedge here from way back here. And now here we've operated inside of it. And so this whole entire time, we have been predicting this move right here based on all these key factors and them all lining up and telling us. So this chart right here was able to tell us what was going to happen to gold and silver far before it happened. And now if I'm correct and what's going to happen, or what is happening, is we're going to get a parabolic move up here on the gold silver ratio. So silver is going to dump while gold just kind of like sells off casually. And that's going to take us up somewhere around that 86 to 90, 80 to $90, or 80 to 90 silvers to 1 gold ratio. And it's going to look exactly like what happened back here. In October of 2008, we had essentially the exact same thing take place. We sold off violently on the gold silver ratio. We got a nice bounce back up to the 0.5 on the gold silver ratio, which would take us exactly back up here to 89 silvers to 1 gold. And then we sold off violently, and silver went absolutely parabolic to gold for the next, this was our high in February of 2010, and it went absolutely parabolic until April of 2011. So over a year, silver went from 72 silvers per gold to 31 silvers per gold. So you literally, if you sold all your gold right here and bought silver, and then here you had twice as much silver as you had gold, twice as much gold as you had silver if you bought back down here. So that's what we try to do. You know, you don't buy, and even if you don't want to sell any, but if you're looking at this chart and you're saying, okay, as long as the moving averages are crossed to the upside on this chart, we want to be buying gold. As long as the moving averages are crossed to the downside, we want to be buying silver. So if I turn back off all the drawing tools so it's not complicated, and we just look at that, you know, this tells us that as long as this 821 moving average is in an uptrend, let's go to our monthly chart here so it's a little clearer. As long as this 8 is above the 21, we want to be buying gold. So all through here, we're buying gold. And then here, we get the cross to the downside. If you have, say, $1,000 a month, and you're going to put it into either gold or silver, when it's crossed to the downside, you're putting it in silver. When it's crossed to the upside, you're putting it in gold. And it just tells you which one is a better value at the time. The alternative is to trade between gold and silver. But again, you know, if you're doing digitally, it's not that hard. But if you're doing physical gold and silver, you know, it's much less likely you're going to go to the pawn shop, trade your gold for your silver for your gold. But, you know, from back here when we got the 821 cross to the downside, that tells us that we want to be involved in silver. And now here, you know, obviously this is the monthly chart now we're looking at, but it's telling us that, you know, basically we're bottoming out in the bearish control zone. We're getting a green histogram on the monthly, about to get the hard buy signal out of here. So we're about to enter into a nice bullish trend on our gold to silver ratio, telling us that if we're going to put money into gold or silver, we want to be putting it into gold. So. And then, okay, so XPT Platinum on the daily getting rejected at 200 exponential and simple. I still think this is going lower. You know, this thing is an underperformer. I think it's the best value out of all the, well, gold, silver, platinum, and palladium right now. You know, we could easily sell back off here to under $1,000. I'm looking to buy at those levels. I put that chart up a while ago in the group for gold, silver, platinum, and palladium, and it shows you essentially, I should share it on here one day too, maybe I will, but it shows you the value of them compared to each other essentially, and their percentage moves, and it tells you right now platinum is far more undervalued than any of those, and palladium is way overvalued. So, but yeah, I'm looking to buy that between $800 and $1,000. The miners look terrible. Let's look at First Majestic first. First Majestic, then we'll go to the other miners. Looks terrible. You know, we basically came back down here, but is it possible we're bottoming out? Sure, it's possible, but based on all the other charts, doesn't look good. More likely than not, this support is going to fail. This is what we were hoping was happening. We were basically putting in this giant, you know, basically just flag or wedge or whatever, and we had broken out to the top, came back down. We're now retesting the top of that wedge. Resistance on the monthly, resistance on the monthly, resistance on the monthly, resistance on the monthly. Broke through the resistance, came back down. Support on the monthly. I hope so. I really, really hope so. I really hope so. And if this starts going parabolic, that probably means gold and silver are breaking out to the upside and inflation is real, or at least the market thinks so. But right now, that is not what we're seeing. Right now, it looks terrible. But if we do get that move to take place, if we do carve out some support right here, my target for First Majestic is up here to like 36 bucks. So at $12, if it goes to 36 bucks, you know, that's nice little gains, triple our money. But we really got to wait and see because, you know, I mean, this was a descending triangle. We're calling out the whole time and we broke down from it. It's not unexpected at all. And if we break down and get the measure move, come all the way back down inside the pattern, it's going to be terrible. But we just lost the slope line. We got the hard sell signal, all red histograms below the 0 line. The 8 and 21 have crossed to the downside for the first time since they crossed to the upside back here at $8. So if you bought at $8 and you sold back here at $16, you're good. You guys know that I sold, I mean, I didn't even sell the top. I think I sold the majority of my First Majestic at like, it was like 20 bucks or something, $21. I still have a small position in First Majestic, but it's literally just profits. I just never sold off. Will I invest further in First Majestic when it starts carving out a bottom? Yes. Does it look like it's carving out a bottom? No. Now? No, it does not at all. There's nothing telling me right now that this is bottoming. The only argument you can make is that it's hanging on to this 89 exponential, and it looks like it's getting ready to break down from it. $10.63 if it breaks. We're holding on to 21 right now. I think it's more likely that we get a push back up to like 14 or 15 bucks and we just oscillate in this range. But we could very easily, if we break down from this level, 10.59. We're getting a hard sell signal, sell by sell, top of the range, divergence signal. I mean, you know, they're kind of spaced out on the monthly, but multiple red histograms in a row. Looks terrible, guys. On the monthly, when did you want to get into this? At $6.77. It crossed to the upside. So, you know, there's no reason. There's no reason to believe this is just going to go parabolic now. On the daily, it looks okay. Couple green histograms. Looks like it's leaving the bearish control zone. Buy, sell, buy. Reliable signal. We could take a stab at it right here. But in all reality, I think it would just be a 15 or 20% scalp. And maybe I will do that. Right now, I'm really not like just burying money into these markets. There's a lot of stuff right now just telling me I don't want to just start dumping money into markets right now. You know, I've been doing some scalp trades and stuff, but as far as investments, I'm just leaving cash on the sidelines right now. I don't see a lot of good opportunities. There's a lot of arguments that markets will keep going parabolic, but there's not a lot of value, and I'm more of a value investor, and obviously I prefer to buy things when they're low and then sell them when they're high. I don't like buying things when they're very high and selling them when they're very, very high. I just don't like doing that. It does, in my opinion, it's not a sustainable way to make money. It's possible you can buy something when it's going parabolic and it keeps going parabolic, but it's also very hard to pick tops on stuff. So how do you know when to get out? And maybe you're already buying the top. I don't know. SILJ on the daily. Let's look at a longer time frame. You know, again, we have lost 821 across the downside. Looks terrible. Looks terrible. I mean, it's basically just, it's pouring out all its gains. You could have got bullish on the SILJ at 935. This is Junior Silver Miner Index or ETF. And then you should have got out of this at $15. But again, you know, that's a nice little ride to the upside. But now the 821 have crossed to the downside. This looks extremely bearish. This is a perfect rejection off of our slope line right here. We came all the way back up, got rejected, and now we're just dumping, pouring out our gains. Monthly still looks decent for now. It's holding on to 21, but next target's like 12 bucks on this. It's not moving as much as some stuff is, but it looks terrible. We had this basic, you know, flag pattern, tried to break out to the top. Maybe you could argue it was an ascending triangle, but now we're broken out the bottom of it. This is an old chart, so please mind that. You know, we broke down below the 236 and got rejected of the move from March of 2020, the capitulation. came up all the way to $18 from like $4.50. At this point in time, it looks like we're headed down here. It looks like we're headed down to 11 or 12 bucks on the silver junior miners. USAS still looks terrible. Again, 1 drive, 2 drives, 3 drives of bullish divergence. 1 drive, 2 drive, 3 drive of bullish divergence. Look, it's hard for me to get bullish on this thing. You know, I told you guys my invalidation level was back in here. I told you when I was getting back out of this. You know, that's what happens when you pick bottoms. Sometimes it's wrong. This thing looks like it easily come back down here to like $1.18. Maybe it puts in a left shoulder, head, right shoulder, comes back up, gets a massive move back to the upside. You know, if it starts like carving out a bottom around this level, I will probably take that trade for like 100% potential gains. But I'm not just going to eat this thing if it takes a dump back down here. It could very easily have a low right here, come all the way back down to like 50 cents and put in a higher low and then come back up. But right now, bearish chart, everything's bearish, all bearish, everything. Yeah. Tilray. These pot stocks look bad. I mean, they literally took out their lows from back here. You know, they're kind of hanging on to it right now, but again, they look bad. They're probably going to keep looking bad until they don't. Long term, still like these, but they have broken down below the 200 exponential moving averages. 821s have crossed to the downside. If we switch over to the weekly, 821 has crossed to the downside. Looks like a rejection candle on the weekly. Hard buy signal, failure, and now we're selling off. Not good. Not good. ACB looks even worse. Never even got above the 200 exponential and sustained it. Weekly, failure. It's headed back down low. Again, all these pot stocks look the same. CGC, not even a bother looking at it. Same thing. It looks even worse. URA, uranium on the daily. This is uranium ETF. Same thing. You know, got out of this one at the 821 cross back here. Came back up, got rejected, lower high, selling off. Hard buy signal, couple green candles here, trying to bounce at 200 exponential, but looks like it's getting rejected. You know, if we switch over to the weekly, same thing. We're under the 21 moving average. Until we close back above like $20, I can't get bullish on this. We really need to save this 821 cross. We tried to do it, and it looks like more likely than that, we're headed back down here to like $16.98, $17. Looks terrible. Uranium Energy Corp. UEC, same thing. You know, I think we're likely headed lower to our target back down here. You know, somewhere around our first target was $1.73, second target $1.50. I think we get there. 821 have crossed to the downside. You know, 821 on the weekly have crossed to the downside. We're going to try to maintain these levels right here. But again, we are just now getting the slope flipped over. We are below the slope line, obviously. All red histograms. Everything bearish on this. Everything looks bearish. All bad. CCJ, same thing, 821 cross the downside. We're in the middle of that measure move. Still expecting to get down here to like $14. We're getting a hard buy coming out of the bearish control zone. A couple green histograms. Could not get above the 8. Maybe we do. But as far as I'm concerned right now, we're getting rejected. We bounced the 236 and the 200 exponential moving average. I think we put in a lower high and then come back down. Our target on this like 12, 13 bucks. That could easily change. I love uranium long term. I love gold and silver long term. I love copper long term, but I just don't see it right now. These trades all got overcrowded, and I expect that to continue happening. Copper did cross its 821 on the daily back to the upside here with that recent move. Came back up. We topped out at the 1.618 Fibonacci extension. Now we're topping out the 1.5 Fibonacci extension. We could easily continue back to the upside on this. I love copper long term, starting to show some bullishness, but we still got to wait and see on this. Again, it's gone parabolic, all-time highs. So lithium, LIT, lithium battery tech ETF, hanging out at those all-time highs. The 1.236 target was hit. We're consolidating here. You know, I still expect us to get up to that 1.5 target of $87 or possibly as high as 1.618 of 90. I'm still in this trade for now. I don't love this price action. What I do love about this though, or I don't like these levels to buy, I should say. What I do love about this is it did exactly what we said. Broke out to 1.236, came back, retested that high, retested that previous high that was resistance, found it as support, and then burst back to the upside. Do we double top right here? Maybe, but overall, looks to me like continuation. And then we have Lobster Futures, the old wood. I'm just kidding. It's really lumber, guys. I know. Came back down to the 618, bounced it, got a hard rejection candle at the 0.5. I think we probably continue up here higher to like 826, but we could easily just continue back down or chop around in this range. You know, it's going to be tough for lumber to go back parabolic again because there's just lumber sitting around everywhere because people were speculating on it. Caterpillar broke down from that key channel. It has now lost the 821 cross to the downside. You know, I expect this. We got the measure move already. We're just putting in a low, then a lower low, a high, then a lower high. I expect this to come back down here to the 236. I think we'll easily be able to get this under $200. So I'm going to add to my position eventually, but this could easily turn into a year-long 40% downtrend. Deere, John Deere, slightly more bullish, but same chart basically. I expect it down here at like 291 or 240 in the near future. Maybe not near future, but sometime in the next few months. AM, Antero Midstream Corporation, you know, it's trying to save these levels, trying to get a nice little bounce right here, but we got to be careful. It's starting to look tired. I like it overall. Fundamentally, I like it, but technically, it's looking decent, I should say. It really is. Cemex, it's the same chart, same as Deere, same as all these industrial plays. You know, channel going up, breakdown from the channel, retested as resistance, sell off. I expect this to go lower. If we burst back into the channel here when we open and we start going to new all-time highs, that's fine. I'm still in a small position on this currently. CLF, Cleveland Cliffs Steel Corporation. This is a good gauge of like the overall, you know, U.S. steel markets, or is this U.S. or Canadian? I can't remember. North American, let's say. Same thing. You know, broke down, trying to retest it. Could even come back up here and go all-time highs again, but I expect this to sell off. I do not have a position in this, but would be potentially interested in the future as the more I look into it, the more decent it looks. But I think we'll be able to get it at value pricing. Last but not least on these, and then we'll take a short break, is Ford. You know, Ford, same exact channel once again. Absolutely parabolic. Still in a position on this. We broke down from it here. We have this little descending, broadening wedge taking place. Came back up. We're now squeezed between our long-term support and our short-term resistance. More likely than not, we break to the upside from here because the support goes back like a year and a half. And the longer it is, the more important it is. But we are squeezed here in like this little mini triangle area. I think this is going to burst to the upside, but fundamentally, you know, Ford has not been doing well. They're shutting stuff down. They don't have the semiconductors. I mean, fundamentally, Ford looks like crap. Does that mean it can't just burst to the upside here? No. Does it mean it can't just burst to the downside here? No. If it breaks down from this area and confirms, though, I will get out of this position. But until then, I'm still in my position on Ford, for now at least. So yeah, let's take a quick break. When I come back, I will adjust the chat, and then we will jump into our traditional stocks. We've got our indexes today and sectors, and then we'll take a look at our tech sector as well. So take a quick break, and I'll be back. Take 5, guys. All right. About to continue it on here. Let's jump back into our indexes. Dow Jones closed our daily all-time high. Still looks good. Still expect continuation on this. No reason to think otherwise. S&P, same thing, new all-time high. Still expect continuation on this. At least to the top of the range. Still got our target up here at like 463. Still bullish. IXIC, Nasdaq, new all-time high. Still expect our measured move of the ascending triangle, 15,719. Russell 2000, basically up at the heart line, got rejected. Again, if everything else is going to be bullish, I would expect this to continue on up here bullish as well. 2,341 is going to be that tough resistance. The support's going to be 2,131. I think more likely than not, we just chop around inside this channel. So, but overall, definitely the worst of the indexes of the, by far the worst of them. 821 have crossed to the downside. The weekly is still hanging on for now, but I mean, we really, really need to get above this heart line. We're about to get the 821 cross to the downside, and that's going to look extremely bearish. We crossed the 821 back to the upside at 1,380. Back in June of last year. So we've had a year in this bullish uptrend. If this flips over to the downside, that's going to really tell us something about these markets. It's really going to tell us something about these markets. It's obviously very clear that, like, if you look at the overall breadth of the market, you look at 100 random stocks, 90 of them probably look terrible right now, or I shouldn't say terrible. 90 of them don't look good right now, and then you'll have maybe 10 making all-time highs. If you look at the indexes making all-time highs, it tells you that there's a couple big stocks that are literally holding up this whole market. That's at musical chairs. There's a couple people still playing the game, and everybody else is still in the game because the game hasn't ended yet, but they're all on the sidelines. That's what we've been expecting. That's why we call it stock pickers market, and I expect that to continue. So, material sector XLB, very clear descending channel right here. We found support at the heart line. We're back at the top of the channel. I expect this to be a potential breakout to the upside. If we do break out to the upside, we would be retesting the support as resistance and somewhere around like that $86 range. This overall looks good to me. It looks honestly like that's what's going to happen here. So, 5% to the upside, and then we would have to look at, you would have to say something like a rejection right here. You would want to be out of this situation. If we took out like that previous wick or something like that, Also, remember, this is not financial advice. I'm not your financial advisor whose markets are extremely volatile. Please do your own research and trade responsibly. 2% stop loss, 5% to the upside, over 2.5 to 1 for this measure move. Assuming we consolidate outside here, potentially get like a pull down retest, but overall it looks bullish. Inside of this bearish little downtrend. XLC communication, new all-time high, looks bullish. I would expect it to continue to the upside. I'm not going to go through all the targets here. You guys know my targets on these things. XLE, energy sector. These trades already, this one played out. This one, obviously, we didn't get up high enough on that one, but overall, very bullish on this long term. But we're just chopping around in this range. We have to be careful that this doesn't turn into a head and shoulders, left shoulder, head, right shoulder. So this is the area we're going to be really paying attention to for this to get denied or potentially rejected at. I really want to see what happens up in here because if it gets rejected around this range, I'm going to really want to see, does this neckline hold? Maybe it just fails right now. I don't know. But moving average wise, long term, looks good. This big green circle is our cross on the moving averages on the long term to the upside. XLF, I don't like financials. 821 have crossed the downside, came back up, tried to save it, got rejected. Looks terrible. I'd rather be in anything but this. Looks like it's starting to form like a big descending triangle. Looks terrible. XLI, industrials. This is just a big version of that same charts we already looked at. It's like a more bullish version of what's going on with like Caterpillar and Deere. Still very much inside of this channel. Still at the top of the channel. And then if we zoom way out here, we can see This is just a channel inside of a channel that goes back to 2009. So we basically just been operating inside this channel, and now we're operating inside of a little mini channel, and then eventually, you know, targets to the upside. If we make new highs somewhere in like that $116, $120 range, maybe that's like a year out with the infrastructure plan and everything. If that ever gets passed, maybe we come back down here to the middle, like 88 bucks. But overall, still looks decently bullish, but just chopping out in this range up here. XLK, new all-time highs. Technology obviously looks good. Tech looks good. Tech's pretty much what's holding up the entire market. XLP, consumer staples, back up here retesting the all-time highs. Does it break out to a new all-time high? Yeah, I think probably. Got a bunch of green histograms here. You know, it could easily do that same thing that we've got going on with like the Ruddy, the old Russell. We could easily see, you know, a situation like this play out where we just basically chop around. So what I want to see a breakout of this range. Breakout of this range looks good. Anything else, I think more likely than not, it's just going to keep operating inside this range until it doesn't. So we're at the top of the range now. If it breaks out, comes back down, retest, consolidate, I think continuation. If it gets rejected right here, I think it heads back down to 70 bucks or 68. There's really no meat on the bone in this. It's more like just what you're looking at. But consumer staples, I would say if you're going to be bullish on one thing, it's probably these, because people are going to need stuff no matter what happens with like the economy and monetary policy and all that stuff. And I think more likely than not, those companies will do better overall, because if their input costs are going up, you know, manufacturing costs, labor costs, whatever on all these companies, they're just going to raise them and pass it down to the consumer. So real estate back up here at the all-time highs, I think continues to new all-time highs. You know, there's a lot of resistance in this area, but I don't see any reason it doesn't. Utilities, a little bit of a safety play, still operating inside this little descending channel. You know, I still think we're going to get the break out of here, and then some of these measure moves up to the upside. Again, we're inside of this gigantic channel that goes back to like 2008. So more likely than not, I think we come back up here and test like 70, 71, or potentially as low as $61. But, you know, this looks to me like a bullish consolidation, and then continuation to the upside. So first measured move already played out nicely. XRT, you know, retail. I mean, this is just a giant ascending triangle. You know, I think it's going to break out to the upside. You know, should break out to the upside statistically, you know, 66% of the time. So measure move on the breakout to the upside should take us up to like $121. You know, it's like a 20-something% move. So we're squeezing in, we're pinching into the top right here. Just a matter of time, I think. But who knows? That one could be heavily affected by what happens with the economy, you know, and potential lockdowns or whatever. I don't think it's going to happen again. I think that they're just using the whole different strains and everything to like FUD so that they can keep like stimulating the economy and the people. You know, we obviously have a crazy situation going on right now. We have UBI for baby makers. You know, they're going to pay you. It's not even a credit. It's not a tax credit. You don't just get money off your taxes. They literally send you money that you wouldn't have had to pay the taxes to take care of your children with. I'm sure, I mean, look, kids are expensive, but let's be real here. If we start paying UBI for, you know, everybody that has a child, $300 per kid, what's that going to encourage you to do? Make more kids, because you get paid $300 a month per kid. So, you know, have 5 kids, get $1,500 per month per kid. It's a pretty good deal. I mean, honestly, let's be real here. So let's look at our policies and see, are policies going to encourage people to do that behavior? Yeah, if I have 2 kids and one of them, you know, they each have chores. One has to mow the lawn and one has to unload the dishwasher, and they each get paid $20, you know, a month in an allowance. And then one of them says, I'm not mowing the lawn anymore and I just don't feel like it. And then I say, oh, that's cool. I'm going to give you $30 a month now to not mow the lawn. Then the other kid's still getting, you know, $20 a month to unload the dishwasher. Eventually he's going to say, well, I'm not going to unload the dishwasher anymore. And you're like, okay, great. I'll give you $30 a month to not unload the dishwasher. And then they're like, okay, great. I'm never going to mow the lawn or unload the dishwasher again. Well, that's what we've done with jobs. So I understand, you know, there's lots of like lines crossed and blurry and the government shut down and this, that, and the other. But, you know, if you incentivize someone not to work, expect them not to work. So that's how I look at allowance. That's how I look at, you know, positive and negative reinforcement. You want people to go get jobs, let them still get that same aid and then also be at their jobs, or pay the people that are working, you know, an extra $150 per week or whatever, because they worked through, you know, everything that was going on. You have to incentivize people to do what you want them to do. There's either positive reinforcement and negative reinforcement. You can spank your kid if he doesn't unload the dishwasher. You can give him money if he does unload the dishwasher, but you can't give him money to not unload the dishwasher and then get mad when he doesn't unload the dishwasher. It makes no sense. Same with kids. You know, if you want people to be responsible adults and you want them to have relationships and get married and take care of their families, incentivize them to do so. Don't incentivize them not to do so by like all kinds of like welfare programs and stuff. Don't pay people to have children that they can't take care of, or even if they can take care of them. You know, don't give people a bunch of money to have kids and then get mad when they have a bunch of kids. So in my opinion, what is it like the government's trying to do right now? They want to like basically UBI people who don't feel like working. They want to pay people to have as many kids as possible. They want to make people unhireable by raising the minimum wage, because you guys know how I feel about minimum wage. It's good and everything. I think people should make money. I think people should be able to support their families. But if you can't provide a business $15 an hour worth of value, you can't increase their output by $15 an hour. You can't make them over $15 an hour in profits. They're not going to pay you $15 an hour. So all you're doing is you're lifting up. Like minimum wage where I live is like $7.15 an hour. So if you raise it to $15 an hour federally, you know, people are going to get paid twice as much. Are they going to then provide twice as much value to the employer? Well, some of them for sure, maybe, but probably not. Most of them probably not. So what's going to happen? Those people become unhireable because they can't provide value worth $15 an hour. Therefore, no one hires them to do a job because they're not worth $15 an hour. Not as a person, not because they're not, you know, good people, but because they don't provide value. Therefore, what happens? They end up on unemployment, they end up whatever, or you create a black market for labor. So how do you fill a black market for labor? You have people that are willing to work for under $15 an hour, you know, under the table or whatever. So now you get less tax money from those people because they're not paying taxes. They're probably going to be getting some form of federal assistance. And now you're turning what was a good businessman, what was a good potential employee, into a criminal. Well, how do you fill those jobs? Well, you either fill them with, you know, people that are unhireable or illegal immigrants. So how do you get people to work those jobs when everybody's just sitting at home on their couches? You open up the border, let everybody run across from the southern border, and then those people can be hired as illegal immigrants. So, you know, again, all these policies perpetuate the, you know, downward cycle of our country and many other countries around the world. So you want to say that, you know, these are unexpected effects or whatever. I say that they're getting exactly what they wanted. So but anyway, there's your rant for today, guys. Hope you enjoyed it. XLV, healthcare sector, new all-time highs. I expect it to continue making new all-time highs. XLY, consumer discretionary, retesting the all-time highs. I expect it to continue making all-time highs. U.S. oil crude got a nice little bounce off of our breakout level. We had an ascending triangle. We broke out of it, came back down, retested it. I think we continue to the upside. You can believe me. I think new highs, cycle highs, not all-time highs. I think crude easily goes to $80, maybe as high as $100 in this cycle. If you ask Kathy Wood, she thinks oil goes to $3 or $12 this cycle. So we'll see who gets their target first. I have a feeling that oil will not be at $3 or $12 anytime in the next 20 years. And I just want to reiterate the fact that that woman has the right macro view on things, but is an absolute moron when it comes to short-term stuff. Jets. So this is important. If you look at historically what happens with transportation and the correlation between transportation and like the overall economy and health of the economy, this is often a leading indicator for what's going to take place. So this is basically a transportation ETF on the weekly, and this one is obviously like planes and jets and, you know, stuff that makes them and etc. It's part of the transport sector, but heavily aviation themed. So this one is obviously selling off below 200 exponential and simple moving average, downward slope on those two moving averages, getting rejected, heading down, very bearish on the weekly. Okay. And then Hale, again, transportation ETF, on the weekly, once again, went into a bull market back here, went into a bear market right before the capitulation in like March area, bull market in June of 2020, and now here we have crossed 821 to the downside here. And again, is this a leading indicator? This is telling us markets are going to be, suffering very soon. I would say probably yes. I mean, this thing went absolute parabolic, and before that it was sideways to down, capitulated, and now it has gone up, since the previous all-time high, it went up 111%. So would you argue that from when all this went down, that these companies, that these things inside of the ETF are 110% better companies, 110% more profitable, 110% better investments? Or would you argue that this is just asset bubble? I would say asset bubble, but what do I know? So let's take a quick little jump over to a couple excerpts I wanted to share with you guys. Oh, well, there goes some of them. Looks like you're only getting half because I had a pen holding my place. These are a couple more from the Stock Market Technique #1, Richard D. Wyckoff book. There are a couple of these little like flashes that are in here. A couple useful things. They're just sort of like blurbs or whatever. But this is a good one. Why I think moving averages are so important and why I value the 821 cross and the overall direction of the trend. It is the most perfect example of following the trend would be a monkey clinging to the back of a boa constrictor as it wriggled through the jungle. You're the monkey, the boa constrictor is the market. You just jump on the market's back and you just ride it, okay? Or you can just, navigate your way through the jungle up and down and try to swim upstream and all that stuff. Not me. Not me. Not interested. Okay. Here's another one, why it's so important to actually learn these techniques and why I do so much educational stuff and I don't just get on here and tell you like nonstop just a price target. I tell you how I get that price target, why I'm using that price target, why technicals are so important and fundamentals are less important for trading. If I were to give you a tip on a stock and it made good, I would not be doing anything constructive. But if I can show you how to trade successfully without asking for anyone's tips, I've accomplished something worthwhile. It's a difference, that's like straight out of the Bible. Like, give a man a fish he eats for a day, teach a man to fish, he can feed a village. This one on gaps I thought was kind of funny. Many chart players have a way of trading on gaps. That is, when the price of a stock jumps over several points and leaves a blank space on the chart, they call it a gap. There may be something in this idea, but somehow it always makes me yawn. I just thought that was funny. But I do believe in gaps. Gaps do get filled statistically very often, more often than not. Okay, next one. It is a man's ego that keeps him coming back into Wall Street in spite of his losses. He will not admit to himself that he is licked. Rarely does it occur to him that while persistence is a virtue, failure to improve his methods of procedure delays his final success. So persistence is key. It's definitely a good idea. It's definitely a good virtue to have. But if you don't improve your methods, you're just going to keep failing. So fail, identify why you failed, and then correct it. Like I always talk about in the program, in my own, trading techniques, and why it's so important to identify and keep a trade journal so you can figure out why you made a mistake, what's reliable, what's not reliable, and how to eliminate the things that are not reliable so you don't continue to make those same mistakes. Next, according to a table compiled by Bradstreet's Incompetence, according to a table compiled by Bradstreet's Incompetence, no, there should be a comma right there. Incompetence is the greatest single cause of failure in business. The three main causes are 1, incompetence, 2, lack of capital, or lack of, I'm adding this in, lack of basically like, separating up your capital. So you go too heavy on too few trades. And then finally, inexperience. They account for 72% of all the failures. So incompetence, lack of capital, and inexperience account for 72% of all failures. This describes the Wall Street picture perfectly. So, that's why it's so important to actually learn what you're doing, not just to like jump right in, go all in on stuff. Because, if you run out of money or you don't have enough knowledge or, what was the last one? Or you're just not experienced, you can't expect success in anything, not just trading. Yeah, I lost my page on the other one. Yeah. All right. So that's it. We're not going to get the last couple this time. I'll hit you with them next time. So, so yeah, here are our, about to go to our tech stocks. Tech stocks. The good ones are at the end. Spoiler alert. Tesla. Tesla still looks bad. Crossed the 821 to the downside back here at $820. Crossed it back to the upside at $667. Failed and crossed back down at $699. Crossed back to the upside at $616. And now it's about to cross back to the downside at $650. You can see it played out perfectly. You know, for us, obviously, in the trade group or people that watch this channel, you know, we basically had our bottom, bought it perfectly at the bottom, top, sold it perfectly at the top, again, back down to the bottom, took the entry on the retest, the higher low, sold it again at the top here, and then came back down. We'll see if this area holds. We are technically above this key resistance, but moving average wise, I don't like it. Definitely don't love it. And if we switch over to our weekly time frame and turn off the drawing tools, we will see very clearly what we've been attempting to do was save the 821 cross, and now we have failed. I expect us to come back down and retest the lows. So expect Tesla in the 500s again very, very soon. Maybe it just has like stellar performance on its earnings this week, and I'm wrong. But in the past, even when it like blew out its earnings, it still didn't go up. So it's probably already priced in. Airbnb, you know, again, another one that played out exactly as we expected, failed. 821 has crossed back to the downside. It looks like we're headed back down to the all-time lows. This looks terrible. There's just so much selling pressure on top of your heads here. Pinterest, same thing again. You know, operating inside of this channel, we sold it pretty much at the top. Beautiful gain of 32%. You know, started selling off pretty heavy. Got a nice bounce, a little gap up. Maybe we close the gap, $73, and then continue to the upside and it breaks out. I think more likely than not, though, we just end up moving back up here and then selling back off. We'll have to see. I like Pinterest long term, but this chart's not particularly promising. But you could argue that this is like a heartline test, and if we just threw in like a third line somewhere around like right there, that this was us like retesting the heartline, and it, you know, basically held. I would not argue against that. I actually kind of like that. So maybe this thing starts moving to the upside, consolidates here, gets a breakout. If it breaks out, comes back down, retest, I'll probably re-enter this position. Wish, you know, this is one that looks like it's probably headed much lower. Basically has just been selling off since like $20, and it's back down here at like $9. This is like an actual company that's like technically strong. The chart is not. Fundamentally, it's strong. There's definitely potential for this in the future. Do I think the price still goes lower? Well, maybe it does. I'm paying attention to like our Fibonacci extensions. If we keep going lower, I really would like to get this around like $6, but this is one I'm really paying attention to for like that. What is it, about $6.25? We'll see though. Maybe it carves out a bottom here, but it tried to carve out a bottom here and failed. Tried to carve out a bottom here and failed. Tried to carve out a bottom here. Definitely was a tradable range, but we're headed back down. So if it carves out a bottom here, puts in a higher high than this, it'll start looking good. Maybe I'll take a little position on this. I mean, there's definitely, I mean, you could argue there's something here right now, honestly, just for a quick little scalpy scalp, regardless if it's going to go lower. I mean, there's some serious potential here on this. Again, I would much rather get it lower, but we could easily see, even if we just come back up to the 382, I mean, that's a ridiculous trade. We could put in a 6% stop loss on Wish with a 27% target of a lower high at the 382 off the 236, and it's almost 5 to 1, 4.7 to 1. If we break down past this previous little high low right here, we invalidate the trade basically and get back out, and then we take that same trade again, basically from these levels or from a double bottom. I'll probably do a little scalp on that. We'll talk about that in the group, guys. Bumble, you know, another one. We had a perfect breakdown, descending triangle, perfect trade, 42%. Talked about here we could take that same trade again for like 20%. I did not take that trade. I think more likely than not. I mean, it could easily come back up here. I think it gets rejected again. Until it chops through this area and breaks above and consolidates, I have no interest in being back in this. but it does look like this was probably the trade to be had for like 17-18%. But usually once I trade something, I'm okay staying away from it, letting it develop for a little bit. Oh, that's what my last blurb was about. It was about sitting on the sidelines or being neutral. Damn, I'll have to find that one, and I'll hit you guys with it on the next stream. Baidu and all the Chinese stocks, I don't like any of these right now. I haven't liked any of these for a while. We talked about this. Tencent broke down. Diddy, I mean, look at this. People were saying that's the bottom. I was saying descending triangle all day, and then it just capitulated again. You know, this thing is going to be in big trouble. Another 26% down at $8. They knew they were under investigation by the Chinese Communist Party. They knew they were not supposed to, you know, I mean, they still listed knowing that they were under investigation. Look, they might get delisted. Let's be real here. They should have 100% disclosed that, and they did not. BZ, same thing. You know, so like went parabolic, sold off violently, gap down, closed the gap, ran into resistance, failed, gap down again. I expect this thing at new lows very soon. This is a good play by Kathy Wood. She bought up here. She bought this one at $37 and then immediately gapped down to $30, and then she got back out at like $35. So she only lost like 8% on this. That was a smart move by her to get out and admit that she was wrong. That's that takes a lot to just chalk it up, especially after selling Apple at the bottom and then it outperformed everything else you bought. Neo, same thing, man. I think this one's just going to sell off. It did not have that same kind of capitulation move, but again, it does not look good. I don't like anything Chinese stock-wise right now. We'll see how the charts develop. Taiwan Semiconductors, I mean, this thing, you know, looks like it's getting ready to just sell off here. I'm not surprised why. Again, this has too many like political and like war-related factors. We have a high, we have a lower high, we have a lower high. We have a low, we have a lower low. I think we get another lower low. I mean, there's a good possibility, you know, there's a good possibility that the CCP goes and takes over Taiwan or goes to war or destabilizes the area or whatever. I don't want to be involved in this when that happens. So to me, this is a no-go. Intel right now is a no-go, although I do like it long-term. Pays a nice dividend. I think the best thing they could do is suspend their dividend or decrease their dividend and then ramp up, you know, their actual, like, I think like a year from now it'll be good. So we'll see how that one carves out. Nvidia after the split, I couldn't remember too. I thought it was at $800 and then did a 4-way split, and that's exactly what happened. So overall looks good. It's strong. It's outperformer in the space. I think we're going to new all-time highs here very, very soon. You know, that would have been a nice entry at 180, obviously, but I did not get that. I did not get that entry. We'll see what happens here. Yeah, I mean, this is bullish. I still have a long-term position in this, but there's not a real entry right now. Could have added right then, though, honestly. Zoom, you know, Zoom is still doing what it's been doing. You know, we talked about this forever ago. You know, operating inside a channel. We expected eventually to break out of the channel. It tried to break out, failed. You know, that was our potential entry. It's still not like stopped out yet. I did not take this trade because, damn it. I did not take this trade because it did not hold support right here. I wanted to see it hold above our yellow resistance support, and it did not. It capitulated down in it. If it gets back above here and consolidates, I'll take the entry for this measure move, 35%. But right now, still don't like it. It looks like we're carving out a bottom. Looks like this was maybe a fake out or a short squeeze, but we'll have to see. Peloton, again, could easily come up here still to like 145. Don't like it. Doesn't look terrible, but it's operating very technically. So I think next target is 145 or to the downside back to 106. Lemonade, I haven't charted this one forever. This is our old chart. When it broke down right here, came back up, retest, failed, came back up to a new high right here, failed again, capitulated down. If we look at this on like the weekly or monthly, paints a clearer picture. But essentially this was a support, a little wicked out the bottom of the support, came back up here and put in a lower high again. You know, back down here, I think we come back down, retest the support line again. It's trading fairly technically. Look, I mean, realistically, I think this thing is going to end up breaking down from here. I think it's going to break down from here, but we'll wait and see. Overall, if we switch to a longer time frame, though, it looks terrible. You know, here you can kind of see a little better why I have the closes and why I have it drawn like that. The closes and why I have it drawn like that. But this is a bearish pattern. It was an 821 cross to the downside, crossed it back to the upside and failed. I think it sells back off here. And I think, honestly, it already tested the 786. I think it's coming down to the 886. I think this is going back down to $51. Looks terrible. Absolutely terrible. ARKK trying to hang on here. Trying to save Kathy. She don't want to be saved. You can't save her. ARKK, you know, trying to save that 821 cross, but I think we're headed back down here to 96 bucks. After that, I mean, $72? I don't think that's likely right now. I think it just chops around in this range for a little bit and sees what the actual market does. There's a lot of tech in this, so maybe tech can prop it back up. ARKF, same thing, just barely hanging on. Super underperformer. I really thought, you know, after these two tests right here, I thought we would get up here to $59. Not happening. Maybe we get up here to 55 again, consolidate for a little bit, or burst up 55 and then 59. I don't know. I mean, these ARK stocks are garbage. They're like negative or barely positive for the year after almost 8 months. They're basically at their December/January starting points, while the rest of the market is like making new all-time highs and up. The indexes are up an average of like between 8 and 20%. And these are like neutral to down. Super underperformers for 8 months. If you've been in these for the last 8 months, screwed. If you're in them for the last 2 years, great. But most people didn't get in until they already were done making gains, like I said. Etsy. Okay, so now we're into stuff that actually looks decent. Broke through this high right here. That's good. Close right here. I think we consolidate in this range. We're back above the key resistance, flipping back over to support. I think this thing's going higher. We have to see where it's going to. Let's turn off our moving averages. Yeah, I'm interested in this. You know, we basically had this descending channel, you know, came back down, held the heart line, broke out through the top, came back down, found support, and now we're back up to the 618. Next target is 786, 886, and then previous all-time highs. Could we make a lower high or a lower low? Yes, we could, but I think more realistically that, you know, maybe this tops out here for a sec. It kind of already did, though. Maybe it comes back down to the 0.5. I'm a buyer if we get any sort of like constructive consolidation on this. I like how Etsy looks. You can sell your quilts online or your clay. Square, you know, again, I would much rather be in this than traditional financial sector. Technically, we have a high, a lower high, and potentially a third lower high. I don't love how it looks right now, but overall, it looks good long term. eBay, looking great, looking real great. I really would have liked to see this come back down and either hold support here or get back to support right here. But it's looking nice. I think we're very likely headed up to the target at $78. PayPal, again, back up here, retesting all-time highs. We took profits right here. Nice profit at $17.69, but still have the other potential, the other potential trade target up here at $338, another 10% to the upside. Yeah, if honestly, we'll see how constructive this looks. You know, looks great to me right now. We're basically closed a new all-time high right here. I think this thing just bursts to the upside. Looks very good. All these look great. Apple, you know, new all-time high, consolidating at all-time high. I think it makes another all-time high again, continues bursting to the upside. I think I have some Fibonacci extension target. Oh my God. There's so much on this chart. Still have a little ways to go on the target up here to 152, and then after that 1.618 and 2.618, $166. I think we get there. Apple looks great. Amazon, new all-time high, came back down, retested the previous all-time high as support, consolidating. I think we get continuation. Again, propping up the entire market. Maybe. Is that a problem? No. $4,000 next target to the upside. After that, 42.50. This looks absolutely phenomenal. And Amazon is one of those plays. This is a blue chip. As far as I'm concerned, you know, Apple, Amazon. I mean, Facebook looks good. I personally don't like it. It looks sort of toppy right here. But honestly, I think pullbacks are probably to be bought. But I would rather put my money somewhere that I actually like than Facebook, honestly. But propping up the entire market. New all-time highs. Looks great. Google, same thing. New all-time highs. Looks great. Gap up here. I think we continue getting new all-time highs. Yeah, looks great. Now, let's talk about, that's our FANG stocks, obviously, which are outperforming everything. And the only reason the market's even making the all-time highs. Let's look at this little guy. What is going on with Netflix? Sideways channel. Broke back down below the heart line here. I think we just continue operating inside this channel until we don't. As far as I'm concerned, sell the top of the channel, buy the bottom of the channel. Keeps working, has been working, and will continue to work. This thing has been going sideways at this point in time now since July of 2020. That's a year sideways right now. So where's a good place to park your money? Not ARK or Netflix. I'll tell you that much. This is worse than the ARK funds. So at least ARK did better for a little while before it went sideways. But over 1 year, just continually sideways, that's absolutely terrible. Absolutely terrible. But that's it for today, guys. Hope you enjoyed the stream. Gonna wrap it up right there. Appreciate all the support. Appreciate all the positivity, the love, the comments. Bitcoin looking good. Still pushing up here. Our targets almost up at 40,000 on futures. 38,275. Got the exact move we were expecting. Bitcoin looks good. Ethereum looks good. Even all the shit coins look decent to good. Yeah, looks nice. Crypto looks good. At least short term. We'll see how it plays out. We'll see how we get these next closes. Next 4-hour close is going to be crucial. I don't want to see this selling off heavy, but looks good so far. So there we have it, guys. I'll see y'all on Wednesday. I will see everybody in the group, and we'll talk about some trades for this week and what I have in mind. Obviously, that Ethereum trade is working out very nicely. The Bitcoin trade is working out very nicely. And we'll talk about some of these other trades as well and what I have in mind for this week. Yeah, definitely appreciate all the support, all the positivity. Likes, subscribes, share with your friends, all that good stuff. That's going to be it for today. Our Sunday market look ahead on 7/25/2021. Bitcoin at 38,227. Let's go. Main indexes making all-time highs. This should be another great week in the markets. Definitely some volatility. Got to see what happens here. But as far as I'm concerned, if you're making an all-time high right now, you're going to continue making an all-time high. Definitely a stock picker's market. Definitely not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Remember that even though we had a nice move in crypto, it looks like we're probably going to come back down, close that gap, and retest some of this resistance as support. But that was, again, the measure move we expected. Everything playing out perfectly. If you watch the beginning of this video and then skip ahead about an hour, you can see everything I was talking about literally played out perfectly in real time. So that's always nice. And you can see why I was expecting that, why I was expecting those targets, why they were key. And if you have any questions or anything, feel free to leave them in the comments of the video, and I'll be glad to answer them. And if you're interested in joining the group, let me know, and I will let you know how. Crypto Trend Trader with our Sunday market look ahead, and I'm out of here.